bit of motivation, a whole lot of truth, no financial advice. This is the first time in the history of this show I'm about to kill this shit. I'm not even joking with you guys. I'm so pumped up. I was actually getting ready for the show. I'm in silence. I'm just sitting here. I'm just like, okay, I'm doing some shit just in the background. You guys know I get like my little artwork going. I get the info. I get some video clips. Like this damn show's about to be forever. Like, I swear to God, I'll be here for 24 hours. I will not stop. Do you guys know something? You guys don't know. See, you guys sit there. You guys just sit there, man. And you guys, like, and nobody's doing this. Guys, the world is just sitting. I'm not talking about you in particular. Like, I'm not taking it out on you. Thank you for all the love and support of the channel. I appreciate you all damn day. Happy New Year, by the way. Check this out, baby. Listen to me. I can't. Do you know what was just announced? What was that? Breaking news? Breaking news, Hulkamaniacs. Listen. What was just announced on Hindenburg Research. Anybody know the website? Hindenburg Research is a website that always, you know, they did what did they do? They did, oh my God, super microcomputers. They did that one, right? Where like I'm going in, they're going in there, but you know, Hindenburg Research beat everybody too. And Hindenburg Research did Mullen Automotive. Hindenburg Research, when they do your stock and they kick your ass, oh, baby. Huh? Do you know what they just released today? Does anybody want to be around for Carvana? Carvana, a father-son accounting grift for the ages. Hold up. I haven't even read it. Guys, I haven't even read this thing. It was just, I was like sitting there and I was like, you know what? It's a good time to check in on Carvana. Let me tell you guys don't know? You guys live under a rock? Okay, listen to me. Papa Smurfs, listen to me. Meltdown. I started something 2 years ago. Me, in my head. I don't know why. I'm just going to sit here and gloat for a little bit. Hold on, Marantz. You got to be humble. Oh, my. Kendrick Lamar made a song called Humble. My bad, bros. All right, let me start over. Hold on. Hi, guys. Happy New Year. The year is 2025. And I'm extremely excited to tell you that this is our YouTube channel. We've been here for a long time, almost 4 years consecutively, every day, talking about the same thing every day or not. And I just want to say welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. Enjoy it.
Welcome to Marantz Rantz, no advice on finance. Spin the wheel and take a chance. Get an NFT and a little education. The system got undertow, that knowledge is flotation. You wanna learn? Well, you came to right place. You pumping AMC, might get slapped in the face. Get your due diligence, know who the villain is. Don't be a sheep when the shepherd's carnivorous. So come learn, laugh, and maybe you win big. And listen up, y'all, the wheel is not rigged. Everybody get a chance in the live chat. Kyoto spin wheel, you win just like that. Retail fight back and this retail winning. Y'all just wait, man, this is just the beginning. All fellow simians, GME group singing the truth. We just chillin', infinity pool swimming. So welcome to Marantz Rantz. A lot of knowledge but no advice on finance. Don't even need pants, you can tune in naked like Kenny the Mayo Man. Internet's most hated. Don't wanna lose your money, then it's time for you to listen. If you're ignorant, invest in AMC or Superposition. The stream about ready, they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.
I'm sorry. I haven't even read the article. I don't read the article. It's like the Sports Illustrated swimsuit edition. I'm just here for the pictures, babe. That's it. Hey, Pops, why do you have all those Playboys on the on the coffee table? Oh, you know I just read the articles. That's it. I don't even look at the pictures. No, I'm the other way around. I haven't even read this thing. Guys, I might read this shit inside. I might read this tonight. Mama, my babe, just fair warning, babe. when I come to bed tonight, I might be a little excited. I might have a little reading material. Holy shit. You guys don't understand how I feel about this. Okay, let's just explain it to you guys. For all the ones out there that don't know the channel, that haven't been with me for the last 4 years. Listen, Linda, over 2 years ago, I started making these videos called Connect the Dots. People tell me they're played out. Why are you doing it? It's dumb. We don't care. All we care about is Roaring Kitty tweets. Has nothing to do with our investment. It has everything to do with your investments and the wealth put in front of you. Connect the Dots is a series where I am able to illustrate why companies are going bankrupt, how they do it, why they do it, when they do it, everything, the who, what, where, when, how, and why. Everything you want to think of. I tell you why they do it. Private equity has direct influence on publicly traded companies. They leverage them. They do LBOs, leverage buyouts. But while doing that, while infiltrating the board of directors, while doing all the wrong things when everyone's looking, and then they put their hands up, it's like being the security guards at a bank. They're always like a foot late. They're always like trailing. They're always like they're in on it. That's how it happens. And I've seen it happen for multiple companies over and over. And finally, my head just went, you know what? I can explain this. So I started picking companies a long time ago. I started picking companies. And the stock might look amazing. The price of the stock might look amazing, like attainable. It might look like something you want to buy. And I'll be like, hey, guys, don't touch that. And it happens all day long. It's not like this is like, it doesn't take a genius per se, but it does. Okay, so I'm just saying, you guys know the company called Unity Software, right? Unity, and everybody's putting it out in front of everybody. Everybody's saying, Unity, oh my God, look at this. Even stupid-ass Richard Newton did a video yesterday. I don't know, talking about, well, I've got to talk about this. Roaring Kitty should be brought up on charges because he's manipulating stocks with tweets and he needs to be under investigation. And Unity, we got to talk about this stock, guys. I wouldn't talk about it if I didn't have to. The Rick James meme. Guys, stop trying to break down memes. I don't give a shit. I know I play with them every night. I just say, oh, guys, look at it. It means this, and that. I don't care. Check this out, okay? Just so that we're clear before we get to this part, I want to show you guys something. Connect the dots. No, I don't want to do that one. Man, did I really get rid of it? Oh, shit. Man, guys, I'm excited. Just so that we're clear, this is all being talked about right now in the world. Right now in the world of finance, in the world of Reddit and YouTube and Twitter and whatever else, TikTok and everywhere else people are talking. They're all talking about this company called Unity. Now, I don't have a clue as to what I said a month ago. Now, I did this a month ago. Hey, for all of you that are finally making videos about it, Richard Newton, I did this a month ago. I haven't seen it yet because I don't remember what I said back then a month ago. I do a lot of videos from now until then, but I got to see what I said, okay? Okay, man? Let me see what I said. Oh, am I in the way? Here, we'll take me off the screen. You know what? Let's put me, hold on. The video's really cute. Hold on. Let me make me small right here. All right, let's see what I had to say a month ago. I want to hear it. I want to hear it. Let's see. Let's see if we got this right. You're selling at $4? Good luck to you. I want to talk about a different stock today. I want to talk about this stock. Unity Software Inc. For whatever reason, Unity Software Inc. has the same. Oh no, we can do the verses. We can go in here. We go GME. And I'm going to show you guys something about this compared to GameStop. GameStop's the yellow. Okay, pay attention. GameStop runs up. What runs up with it? GameStop goes sideways. GameStop goes up. Now look at this. GameStop opens up down and goes back up a little bit. What came down and went back up a little bit? What? How is this company running similar neck and neck? Unity Software Inc. How is it running with GameStop? And why? And why don't you know about this? A month ago. Pay attention. Donko, thank you for the love and support of the channel. Everybody, class is in session. Unity Technologies, Unity Software Inc. Here's the company. And as I go to this company and I look at it and I start reading everything you can imagine, Their engine is the one that makes Pokemon Go and Fortnite and all this other Epic Games. Unreal Engine is the rival, and it's all built up. Then I found it. I was like, are you kidding right now? It was announced that together with D1 Capital Partners, the CPP Investment Board, which is the Canadian Pension Plan Investment Board, maybe you know them as the largest investors into Apollo Global Management. Maybe you know that. Light Street, Sequana Capital, and Silver Lake Partners funded $525 million. As you keep going down and you find out, don't worry, I'm just not going to say the names like if you guys don't know them. Unity also received $1 billion investment from Sequana Capital and Silver Lake once the deal closed. Oh, we can go to the CEOs. We can follow the people. Hey, John, how you doing? Who'd you work for? You work for Evolution Partners? Oh, Evolution Partners. Just so happens that's a firm that was built by Silver Lake Partners. Founded and funded by Silver Lake. How about the next CEO? Jim Whitehurst. Jim Whitehurst from Red Hat. What did you do before that? Boston Consulting Group for 11 years. BCG for 11 years. So I'm just curious, if you're not tracking, if you're not paying attention, why private equity companies that are embedded with private equity, why do they run neck and neck with GameStop? Anybody know why? You, Carter's Corner Pocket, you, for 200. The answer? What is short selling? Well, short selling is when private equity firms make a bet on something, and then they make that bet happen. Maybe you missed this part. Do I have to spell it out to you? Do I have to explain it to you guys again? All right, I'll be nice. Here's the deal. Hey there, little gents. There's a small company out there called GameStop. And GameStop's this company from 2013 all the way to 2018 that was over-leveraged, okay? LBOs, leverage buyouts. The way it works in publicly traded companies is they infiltrate the board. And I say they, I'm talking about private equity. Private equity plants their people onto boards. They plant their seeds. They go ahead and water it, maximize profits, and they exit. And how do they maximize profits? They carve out assets. They overexpand on debt. They borrow money till you can't borrow anymore. It's not their loss. It's your loss, public. It's on your back. This is why companies go bankrupt, because they're not actual investors into the company. They're just people that are making money off of the deals themselves. Every real estate deal, the lease and buy, the sell and buyback and leaseback program, that's them. How about the inventory themselves with Hilco and Company? That's them. Logistics and selling the freight and the actual fulfillment centers, that's them. Did you not see Burlington Coat Factory buy 44 Bed Bath & Beyonds for $12 million? That's it? Sweetheart deal. Some Bed Bath & Beyonds were sold for $1 on the lease during the auction. I was telling my dad yesterday, we're driving, we're going through LA, all the way through. And he's like, hey, I go, Dad, you can have anything you want to eat. What do you want? He goes, I want some McDonald's. I say, you want McDonald's? We're going to get McDonald's. Hey, don't worry, guys. I'll stop it there. My point is, and the point that you guys should all be realizing right now, is I called out whatever this is, Unity Software, as a private equity pump along the lines with GameStop. We've seen plenty of them. I'm going to name more tonight. But beyond that, we study what private equity is doing to the markets, right? So there's another connecting part here that we kind of gloss over, that we don't really dial in on. And I'm not afraid of doing it because they come at me and I get it. And I get attacked personally. I get attacked. Every which way that you can attack me, I've been attacked, guys. And whether you want to shut down the channel or you want to ruin my life or however you guys want to do it, guess what? Keep going. I don't care. I don't care. I could die tomorrow. I've lived a great life. But the truth is in these videos. These Canadian pension plan investment boards, these Canadian hedge funds, from the way it's been reported, Canada would be completely bankrupt if GameStop's allowed to run. The way it's being reported. And you guys think I'm just making it up or somebody's just out there shooting the shit this way. It's not that. It's going to be something like this, okay? I'm going to show you. I'm going to go to this right here, to this. This is the newest report that just came out, and this is about Anson Funds. Now, Anson Funds is throwing everyone under the bus, and Moez Kassam, Charity Con. Now, listen to me, guys. Anson Funds is a Canadian hedge fund, short hedge fund. They all are. All these guys are shorts from Canada. And they teamed up with Andrew Left of Citron Research. Citron Research does a hit piece on GameStop, says it's not worth anything. It's going back down to $20. These guys lose $1 billion. But these guys were naked shorting GameStop, made all their money back the following month. But if you know the truth about this, these guys are all under what they call a silent indictment. That means they're all found guilty already. Anson Funds allegedly, according to inside sources, and I have all of this from Kirsten O'Shaughnessy, whatever her name is. She's a really good little reporter. I thought she was until she put up a damn video of what's his name, Donahue George, but whatever. So she's on Twitter, and it says reportedly Anson Funds offered $50 million to reduce the charges, and the Fed said no. They are turning on each other. Remember what I told you? You take out the one common denominator. You take out GameStop. GameStop's no longer a short play. GameStop's no longer going to, fall to pieces. It's a profitable company, and they're doing everything right. Now what are these guys going to do? They're all going to turn on each other. And right now, hot off the street, under intense pressure, Moez Kassam gave up Andrew Left to save himself. I have seen this happen before. If you knew what happened with the Drexel Burnham Lambert, what happened was Mike Milken was low-hanging fruit. Mike Milken was known to be doing all the things he was doing with his leverage buyouts, with his junk bonds. They were doing funny things, and it all got prosecuted. Him and Taryn Pizer and the whole crew. But you knew where it all stemmed from. You knew it was from Ivan Boesky and everything from 1985 when he came under indictment. They found out that these guys had funny what they call fancy information. They had the insider track. Well, guess what? These guys made the inside track. These guys actually made bets off of the articles that they were posting, and everybody knows it. So everyone's in trouble right now. That's what they're telling you here on the website. It's all coming up. It's all being played out. But the feds are the one actually doing it. And I talked about this. I don't know what video it was on, guys. I don't know what live stream was on. Trust me. I had to put a lot of things into the vault. I was looking for it all day because I know I talked about this in detail. But that partnership between Andrew Left, who's been arrested, who's already being investigated and charged, and Anson Funds with Moez Kassam, they're literally going at it head-to-head to see who's going to be guilty and not. Right? So Anson Funds is one end, Citron Research is the other. And it's all about GameStop. I know they don't want to say it out loud. They try to tell you it's about something else, 2018, 2020. It's about GameStop, guys. I'm telling you because they're both involved in it. And then if you read the fine print, these guys actually sold the most shares that were sold naked. They were naked. They didn't even have them. And they had the biggest position ever on the short side of it. So when the markets got halted. But it's being investigated right now. And Market Frauds is the damn Twitter ticker symbol, whatever. But we have other stuff to talk about tonight. Okay? We have plenty of things to talk about. I know everybody wants to talk about GameStop having a all hands-on meeting. That's what's being announced right now. And, of course, we're going to go over the Carvana report from Hindenburg Research. I'm going to do it live with you. I have not even read it. I don't even know it. I don't even know what they're saying. I just know I did the research 2 years ago, and I told the world Carvana's a fraud. And it's official now. Because Hindenburg Research doesn't miss. They don't miss, guys. If they bring out a hit piece on you, like if they came out and they said, yeah, Rico knows, man, he's a fraud, I'd be like, yeah, they got that right. No, I mean, look at this. The cheap shot at my bro, man. Whatever. I don't care. It's all fun. It's all banter. But check this out. What a time to be alive. Are you kidding me, man? This guy. Marantz, you should have 100K plus followers by now. No one is dropping truth bombs and have come to be true like you. You must be suppressed. This info cannot be common news. Yeah, Endgame, I appreciate that. I really do. You know, guys, I don't know how many followers I should have. I don't know when we started getting everything right. But we have. Connect the Dots is 100%. If you guys have never seen Connect the Dots, it's in my playlist. It's a district. I don't have them all in there because some are live streams, some are not. But you get the bulk of them. You get the gist of them. And when you find out how they're doing it, how they're manipulating markets and companies from within, it really opens your eyes. And then we see it. and we see it. So I'm gonna do a segment tonight too. Don't even get me started, guys. I'm doing a segment at the end of the show. This is like I told you, it's a long episode. This is gonna be a very long show. So if you like to hang out with me all night, we're here. But I want to give you a heads up right now. I'm gonna do the markets with you tomorrow. I'll be live during the day on a Friday, close of the week. I never usually do a Friday. Tomorrow's the day. I'm gonna do tomorrow with you guys because I won't be here Saturday. Saturday, I am starting my physical regimen where I'm going to be climbing mountains again. I want to do it on a weekly basis. I don't know. I used to do it on a daily basis, but I got to pace myself. I don't want to overdo it, but I know I need to get away. I know I need to get up into the mountains, and I need to find a little bit of peace up there. Physically, whenever I start working out like this and I go crazy, it feels good for me. It releases a lot of endorphins. And my wife, she's on my path because she bought me some new headphones. I had said I needed headphones because I want to start working out again, so she got me there. So you speak the truth to power, Marantz. Mad respect for what you do. Thank you, man. Hey, thanks for the $5, Sergio. That means a lot, dude. You know, it's been a good year last year. We were gauging it. We had 3,600 subscribers for the year. So that's a quality year for us. If you guys don't know this channel and the way we build it brick by brick. We have word of mouth. I actually met a guy today. He said he finally watched the show. Like, he's known me for, like, I don't know, 3 months, 4 months. He goes, hey, man, I finally got around to watching your show. And I was like, cool. And he's like, I had no idea you knew so much. I'm like, what the hell? Like, do they just walk around thinking I'm a dummy? Do I look like a dummy to you? Don't answer that. Don't answer that. Thank you so much for the dedication. Wow, thank you. I would rather have 10 real ones here than 1,000 Matthew Kors people type. Oh, God. Speaking of Matthew Kors, hey, check this out. Here's what I'm doing at the end of the show. Just if you guys want to stick around for the show, at the very end, I'm going to play a video from each year that I've been on YouTube. And I'm talking about from this date. So from January 2nd of or close to it, January 2nd and 3rd, in that range, from 2021, from 22, 23, and 24. I'm going to play you 3 different clips, and we'll see just how right we were from back then to now. 2-hour workout today, bro. I'm in it. Let's get it to stay healthy. Yeah, I'm down. It's not that I can't stay healthy. I mean, I'm healthy, right? Whatever. I look the part. It's just, I always just want to hang out with my wife and tell her, hey, babe, let's go. But really, it's just I want to lay down and go to bed, watch some Netflix, and not worry about dogs, cats, or kids. And this might be the last day I can do it on Saturday. Marantz, your short video last night on Gary Gensler was a banger. One of the most informative recap in the normies in the back. Yeah, thank you, man. Thank you so much. Gary Gensler will be spending time in Cuba soon, if not there now, Camp YMCA. Yeah, who knows? Who knows? You know, guys, whenever I do a video like that, I'm not there to provoke the man or do it. I really have questions. Like, why are these guys allowed to manipulate companies and outcomes? All right, let's talk about some stuff on the market today, guys. Okay, 327. 327 is the number. That's how many stocks in the S&P 500 were decliners today, okay, versus the 174. I know that's 501 in the math that were actually accelerators. And what does it mean? It means that if you're going to have a downturn on this economy, on this market, today's first day of the year, first time for everything, for this stock to go down, and that's okay. Not only just stock, I'm talking about the whole market itself. So I'm not a believer in this economy. You guys should know this. It looks like everyone's still on vacation, according to the volume that was on the S&P. But the other part about this is this. Everyone's waiting for Donald J. Trump to get sworn in on January 20th, and that's when this economy starts. That's when this world starts. Me personally, I think it's going to be a down day. I don't know, or maybe a down week after the fact, but we don't know the impact of tariffs. We don't know the impact of new tax cuts. We don't know the impact of regulation being, eased. But I'm hopeful. I'm hopeful for people. That's what I am. Do I care about the government and the kids, and these companies themselves and the like? No, not at all. But they're all fakes and phonies. I mean, I just saw a damn video of, who was it? Mark Zuckerberg talking about climate control. He's like, oh, climate control. We all need to dial it in. We all need to do better for our kids and our futures and our families. And then this dude buys a $300 million super yacht with a helicopter and all this shit. I'm like, bro, $300 million, bros? You just got that laying around? Who are you, Roaring Kitty? My goodness gracious, guys. But thank you so much. I'm out. Who was up there? I don't know. Somebody got deleted. Squeeze next week. What? Yeah, sure. Squeeze. I don't know. Your little cheeks like that. Just squeeze them like your little check mark. Do whatever you guys want. You guys think I care about daily action? Price action? No, I don't. I don't go that. I don't get too excited. I'm gonna tell you guys something, okay? And people don't know how to take this when I tell them this. I said this is a year for unrealized profits, and what that meant was that all of these companies in the Mag 7, right? They're all investing for the infrastructure of AI, artificial intelligence. And right now, the only thing that you can remember that you can actually use or think about like artificial intelligence was like ChatGTP, right? ChatGTP. And that right there already has flaws in itself. It's like it's broken almost. Like you can trick it basically. So I don't know how that actually made money, for Google or anyone else. I don't know how it makes money, but apparently AI is an investment people are making, and I want to know where the profits are. Because not everybody can do this. Not everybody can invest money for large amounts of time with their general partners, tying up those funds. The limited partners expect returns on their cash. And if you're going to have a downturn, you just had over a 50% increase on the S&P over the last 2 years combined. They're 2020 plus, right? What are the chances their third year in a row is going to be golden? The last time we had 2 years in a row go 2020 plus was 97 and 98. I'll let you know what happened right after 99. I'll let you know what happened. It's when the head's too heavy, guys. It's like a bobblehead. That's all it is. It's too heavy right now. In my opinion, I think this market's too heavy, topside heavy. I saw Apple have 4 days in a row down. So that should tell you something about where people are taking profits. Now, people tell you they take profits for taxes or they're going to take profits for the end of the year. But we're in a new year right now. You're in a new fiscal wrap. And I'm asking myself why half, I think it's going to be 36%. 36% of the S&P 500 companies are trading above their 100-day moving average. Only 36%. That means you're 2/3 of it is just heavy as hell. This is why the Russell 2000 went green today. This is why small caps are going green. But I've already told you, you got to find something this year. If you're an investor, you got to find something not in the S&P. You got to find something that's moving in the right direction, that's sound, solid investments. Now, there's two out there. There's two. One's private equity, which is going to be Burlington Coat Factory. And then there's one called GameStop. I'm taking GameStop, babe. I know Burlington's going to get there. They're going to make them get there, guys. They're overextending even now. Whenever you maximize all your cash and your land and your assets and your leverage to the... you're leveraged, guys. They're pushing everybody. They're just leveraged. Those spreads, those credit spreads, you can't. You know why? I'm gonna explain to you why. Okay? And I want everybody to pay attention. This is why GameStop's your investment of your lifetime. GameStop has all the cash in the world. All the cash in the world. They have the 4th largest cash pile of any retail company in the world. And we're talking about, well, I can't because Alibaba. But they're 4th largest in the U.S., I'll tell you that much. Behind Walmart, Costco, and Amazon, then it's GameStop. And you know what they're not? They're not using the cash. It's the best thing ever. They're doing short-term marketable securities. Do you know what the damn 10-year is right now? Over 4.5. The yield on the bond itself is 4.5%. This is the danger zone for everyone in investments. Because I'm going to tell you what happens when you get to 5%. When you get to 5% yield on those bonds, do you know what happens? People start selling off their equities and they get into something safe. They get into something that returns them 5%. Are you kidding? I have no risk at all. There's no downside to this. I just got to go buy a bond. This is too easy. 5%. I can tell everybody I'm going to get 5%. Matter of fact, I got $2 million. 5% is going to be $40,000. I got $10 million. 5% is going to be $200,000. It's like that. It's like that. So when you're sitting there and you're trying to tell me that you're ready for any outcome because you're invested in the Mag 7, I'm sorry, but they're going to sell the shit off. Let these bond rates keep coming up and your equities are going to go to... It happens every time. It happens every time. Okay? Pay attention. Now, GameStop's going to win just off the interest. Yes, that's the whole point. That's what I'm trying to get to you guys here. And thank you for all the love and support of the channel. I see the chat going crazy, and I thank you, okay? But nobody, and this whole, look at this bullshit right here. Yeah, yardy dotty dotty, okay? I never even heard of you, Yardana, this is what happens to guys like you, okay? Hide this user forever. Okay, you're gone, bro. So you can't come into this chat. Kansas City Shuffle, Chewy, Bed Bath & Beyond, all the shit what are you doing? What are you guys doing out there? Hey, all you guys. Can I tell you something? I'm gonna tell you something. Okay, watch. I got a video for you to watch. This is from. I'm gonna play these throughout the whole damn show. This video is from 2 years ago. I got to make sure. Let me go check the stats on this one. A year ago. This is a video I did January 4th, 2024. A year ago. This video. You ready? I'm going to play it for you. All you Bed Bath & Beyond, all you PPCs in the chat right now, talking about Kansas City Shuffle. Yeah, where'd you get that idea from? Remember what I tell you? When they push shit out in front of you, you might not want to listen. Well, here's what I had to say about all of that. Here you go.
Couldn't remember, man. Marantz, how do you know that PP is wrong? Is 6th Street even a remote possibility? No, it's not a remote possibility. They're wrong completely. They've been wrong about every idea that they've pushed out. How do I know they're wrong? Mr. Capital, I'm going to tell you this plain as day, and I hope you pay attention, okay? Listen. Bed, Bath, and Beyond does not exist. The company is over. That's it. I wish it could be more than that. I wish it could be some big conspiracy. But when it comes to bankruptcy, and you actually go through the process, the whole point of bankruptcy is to be transparent with all creditors. The transparency alone gives you an identity, i.e., who is the stalking horse? They have to name it. They didn't have one. They barely had enough dip financing to get them 3 months to get them set up for bankruptcy. They set it up this way, and they did a voluntary bankruptcy. They weren't forced into it. So you have to understand, they voluntarily tore apart this company. They did it's called vulture capitalism. Everyone came in, picked off the carcass, and left. The executives got paid. The senior holders of the bonds are getting paid whole. Secondary lenders and everyone else is going down the track. But in the category that you're at as a Bed Bath & Beyond shareholder, there's nothing there. It's over. And I'll even do one for you beyond that, Mr. Capital. If you are a Bed Bath & Beyond investor and you're watching the PP show with the idea that you're going to get something back, it's not possible. It's not possible. You're category class 9. The general unsecured lenders are at 6. That's the GUCs. They are not even getting it back. I think they were getting back 2% on every dollar. And or how many shares do you think you're going to, if the share price is at 7 cents, guys, they're getting back 2%. What do you think 2% of 7 cents is? Fractions of pennies. You're getting back nothing as a shareholder. Absolutely nothing. It even says it right there in the bankruptcy. So I just want to make this very clear. Even if there was a miracle, and I'm talking an absolute miracle, okay? To give you the example, the Easter Bunny would have to come to your doorstep and shit golden eggs before you get back your shares of Bed Bath & Beyond. But the miracle is 6th Street even remote possibility? Absolutely not. Absolutely not. But if it ever were to happen, you, the shareholder, get 0. That's the truth. So what are you hoping on? You're hoping that some executive from New York is going to make millions of dollars off of a deal that you were once invested in? You get nothing.
Damn.
Absolutely nothing.
I said it. I said it a year ago. Damn, that boy's good. Damn, hey, y'all out there just don't know. But Marantz Rantz, he knows. Rico knows on TikTok. Check him out. Okay, anyway. Isn't that amazing? That's amazing. Man, hey, the Easter Bunny will have to shit golden eggs. Bro, I'm still looking for them. I swear to goodness. My wife hides a golden egg every Easter with like a $5 bill in it. Is that even viable anymore? $5 bills? Okay, listen up. So the report that's going out right now is that tomorrow GameStop is having an all hands-on meeting for every employee at their respective GameStop, whatever. And that they're going to start shutting down GameStops, babe, because there's too many. I agree there's too many. I really do. I showed you guys, I was actually out there canvassing, and I was in Inglewood, or was I in Compton? I was somewhere. I want to be in Compton. I was out there, and I was out there sea walking from space to space, bros. All right, so I went to one, and it was right next to some other stores, but I'd say within 200 meters, there was another GameStop. And see, I do the questioning. I ask questions, bros. I said, hey guys, why is there another GameStop 200 meters that way? He's like, oh man, yeah, because that was the EB, that was Electronic Boutique. And then they changed it to GameStop, so now we're just both here. They got to close one of those down. Everybody will shop at the other, I promise you. But keep shutting them down, guys. We were overextended. We opened up 3,000 in the United States. I'll remind you, 3,000 GameStops is a crazy number. And you don't need that many. Me personally, it almost feels like a Subway or a Starbucks. It's everywhere. Doesn't have to be. But I'm okay with it. I'm okay with whatever they cut out. It's not that we're trying to save, dollars and step over penny. Because, how much more can we really cut out of this footprint? But I just think they need to be more proficient. I want to make more profit per man hour. That's what I'm trying to do. So who knows what's going to happen, with this meeting that they had. And that was as of today. The meeting was today. So we'll see how it all goes down. But I know that it was announced. Now, somewhere out there, this is being read, and I don't know if it's real or not. I don't know where it comes from, but it says, starting January 2nd of 2025, managers holding short positions exceeding $10 million or 2.5% of a company's shares must file a Form show on a monthly basis. This measure is designed to increase transparency in short selling, helping regulators and investors better detect market manipulation, and mitigate systematic risks. Okay. Who's going to enforce this? Hello. Last time I got a rule, I just had to pay a fee and a fine. Who cares? You guys want me to get excited about rules? When they start implementing rules, I'll start getting excited about them. That's all I'm going to tell you. When I see the SEC come out and arrest somebody you guys, I saw a housing crisis happen, and they arrested one dude, Bernie Madoff. That was it. I've seen these sex cases go on. You don't think this is relevant? Anybody? Jeffrey Epstein getting his funding from Apollo. I'm so sorry. Leon Black, who was the CEO of Apollo at the time. I've never been paid $158 million for tax services and given free Lear jets everywhere around the country. But somebody did. And I'm asking you, when is the SEC going to come down and crack down on these companies that are helping launder these illegal activities? No? We can just buy our way out of jail? But one dude got arrested, and he miraculously killed himself. Oh, let me tell you. Bros, if you've done all the dirty work in your world, you might as well stay alive and write a book and tell somebody about it. Tell me why. Now, you ain't Avicii, bro. You didn't make no hits that keep on playing. I want to know the story. Oh, wait, they get rid of him. They get rid of him. That's too bad. Anybody know who Will Howard is? Will Howard, I believe he's the quarterback of Ohio State. They beat Oregon in the Rose Bowl. Is he the quarterback? I got to know. Will Howard. I was watching a clip. It blew my mind. Will Howard. I'm going to go Google right now. I'm not even looking at the chat. Hold on. Will Howard. Yeah, quarterback. There you go. Yeah, he led Ohio State and everything, right? He's the man. 23 years old. Starting quarterback, 6'4", 236. And isn't that crazy? This should be breaking news. They blocked him from taking the stage after his team won the Rose Bowl. They wouldn't let him up on there. Do you know why they wouldn't let him up on there? Because when he did his interview, he thanked Jesus Christ, the Lord. He thanked God first. And they wouldn't let him up there on the mic. That's crazy. I'm sorry. Believe in whatever you want to believe in. I was born in America. I fought for the freedoms of America. I served my country overseas during wartime. I've done it all, just like you guys have. And I'm telling you now, you have the right to assemble. You have the right to press. You have the right to all those freedoms. Freedom of speech, all of it. And I know I said that out of order for the First Amendment, but I'm just telling you, I call complete bullshit on this stuff. This stuff enrages me, but I'm going to be okay. I'm not going to get too caught up on it tonight. But I'm just saying that kid, that young man, I hope he wins the whole damn championship now. I really hope he does. Plus, I was pushing for ASU, but I'm over Cam Scattaboo. I don't like dudes who try to act tough when they don't need to be tough. Right? Make a play. Act like you've been there. Do your thing. That's it. All right, so let's talk about some stocks. Let's look at some charts. Let's do our thing tonight. Remember, I'm still saving Carvana news for later. They will report a thing, just pay it cheap, fine later. Yeah, that's my point. They've already gotten rid of 2 out of 4 of me. Oh, I'm not hurting about it. Oh, there you go. No problem. All right, guys, so let's go. I want to make sure I have everything else under control before I go to the charts, before I do all this stuff, before we have a good time. Now, I know Larry Chang's been tweeting, guys. I know. And he's saying that we're in these phases. And if you guys are not familiar with the phases, I want to touch on it. But hold on, let me go get it. Because it gets me so excited. Like, have you guys ever been excited? Like, just sitting at home, just like, yeah, that's us. But it's us. Hold on. I'm going to do it right now. Just give me one. I got to find it. Just give me 1 second. I'm looking. I'm not prepared for this part because I didn't know I was going to talk about it till right now. I just decided. I was like, hey, whatever. But he texts a lot, bro. I don't know what to do with him. Been thinking about a company's market value and most likely increasing during this journey. Yeah, there we go. So it's this one. All right, here we go. Boom. Found it. Not the charts yet. Okay, so here is Larry Chang's tweet, okay? And I want you guys to understand what he's saying here. First, we got to go to the original tweet. So the original tweet is this tweet here. And this is back, he did this one in May, on May 7th of 2024. Almost a year ago. But he wrote this. This is a phase called the ugly teenage phase of profitable growth. The ugly teenage phase. I know all about it. Bros, let me tell you, I wasn't good looking when I was a freshman. When I was a freshman in high school, I was surprised that I had a girl. I didn't even know how I got that girl. I was wearing my dad's clothes to school because we used to have to wear a tie every game day on Fridays. And we were great football players, my brother and I, but we didn't have clothes. We were broke, so we just wear my dad's clothes. Trust me, going to school in Stacey Adams and dress pants with a buckle on with a little silver tip on your belt and then some silk ass t-shirt. My dad's a DJ, bros. We were out there looking like, I don't know, Deuce Bigelow, the male gigolos. Me and Reek out there really looking like Dirk Diggler. I swear to you. And for all the right reasons. So I understand the ugly teenage phase. That's all I was trying to say there. But anyway, I'm going to read this to you in a way, but not all the way. I mean, I don't have to. It's forever, right? Didn't recognize you either, bro. Who did you recognize? I didn't see who was over there. Yeah, I don't know. I got all the boys are here. Good morning. All right, thank you so much. So phase one is you start with high revenue growth, which is GameStop, okay? Back in like 2011, 12, and 13. High revenue growth, high burn rate. Then you realize due to market conditions that you need to get profitable. Right? We can't just keep going back to the markets and back to investors, asking them for money so we can keep running this company this way. And you can't keep expanding. Phase two, you drive for operating leverage. You cut operation expenses, inefficient marketing spend, headcount, etc. You cut off everything. No more advertising, no more bullshit. And it's an all-out focus on enhancing gross margins, pricing, cost of goods sold, shipping, etc. That's phase two. Okay? Phase three, you focus on improving working capital dynamics. Renegotiate with vendors, suppliers, manufacturers, etc., to enhance payment terms to improve cash. That means getting things back in 90 days, right? Getting all your accounts receivable lined up, all your ducks in a row, getting margin, getting allowances, getting spoils allowance. All of this matters in the world of refunds, of return to vendor, and then final delivery. All of this matters in phase 3, what he's telling you. Phase 4, you clean up the balance sheet, optimize inventory, renegotiate and refinance debt, try to solidify your cash. Now, when you're doing this part right here, optimizing inventory, you're understanding that you're in a cyclical business, okay? It's seasonality, and you're still dealing with inflation, you're still dealing with supply chain shortage, and logistics. Final delivery, point A to point B, how do you actually get it? So all of those phases GameStop has gone through while you've owned it. From 2021 all the way to now, GameStop and Ryan Cohen, they've been doing these things, working them left and right. Now, during these 4 phases, okay, those 4 phases that we've been holding this company, revenue is declining year over year, sometimes materially, because you're compiling against prior quarters. You're comparing against prior quarters. He says comping, but it's the same thing. Comparing with heavy marketing spend. This is why this is the ugly teenage phase. It's ugly if all you're looking at is top line revenue, but it's usually these are usually good signs. And this is why I battle against the meltdown. This is why I battle against any naysayer of GameStop. All these dudes making, these documentary films, they'll put you on there, they'll call you crazy, say you're just too passionate. Yeah, maybe I am. Maybe my delivery is absent from what you want it to be. Maybe you want me to be there and be like, hi, guys, I love this investment, and it's something I'm going to do, and then I'm going to get a haircut when it's finally time to sell. And, I just want you to know that Jeremiah and Isaiah and Micah and every other biblical name are the things I want to talk about tonight. So thank you so much for watching the show. And, yeah, I don't like what Ryan Cohen's doing. I'm ready to sell. He really irritated me with this, he wants to dilute the float and raise the cash, but I want to know where's my profits as a shareholder. I demand transparency. I demand an interview. So thank you so much for watching my channel again. And, I just have questions like, why is Roaring Kitty such a great day trader and I'm not? My name is Dick Newton, and I just want to say, I told you. Do you want any Grey Poupon with your videos there, Dick Newton? Okay, sorry, guys. See, guys? You guys catch me. I get thrown off. My bad, bros. Oh, shit. Karen Newton, bros. My bad, bros. I don't know how that happened right now. I don't know what the hell happened. I haven't practiced that at all. Oh, guys. Oh, man. I haven't done impressions in a long time. If you guys used to watch this show 4 years ago, I did impressions for 7 hours. 7 hours. Swear to God.
Hi guys, on the stock market today, my name is Review Dork, and I just want to tell you how great AMC movie theaters are. Yeah.
Like, John, get me a bagel. Oh. Why does AMC stock, why does it go down when I'm trying to buy me a trailer park? Why? Holy, everybody, my name's Tony. Never mind, I'll stop. I'll stop, bro. Oh my gosh. Who was the other one he was like, well, this stock is I was doing Jim Cramer the other day. I swear to God I was doing Jim Cramer. Oh man, I've done Jim Cramer before. I go, oh, stock. You just gotta slur all your words. Slur all your words like you drank like 5 beers right before the show went live. Where's the Marantz Rantz? Oh bro, you guys ain't ready. Hey everybody, I'm just gonna tell you right now. No, I can't. Never mind. How about what's his name? Man, there's so many dudes that I've already taken care of. You know who they are. Anyway, back to it, guys. I got thrown off. I apologize. Look at that. See? Look at it. Even me. It happens to the best of us. All right. So back to the post from Larry Chang. He says that in phase 4, after you've done all those phase 4s, everyone's looking at top line declining, but that's okay. Marketing and sales efficiency is improving. All OPEX lines are decreasing as a percentage of revenue. EBITDA goes, and of course, the cash flow is growing. So, the operating cash flow is growing. Now, revenue is declining in phase 5, year over year, but you have achieved profitability, EBITDA, and free cash flow, which we have now. Our revenue is declining. We've achieved profitability, and we have EBITDA in the profit zone, in the positive, and we have a free cash flow that's in the positive as well. At this phase, at phase 5, you are still ugly to the world because revenue is declining. But the end of the teenage years is on the horizon. Phase 6, maintaining profitability, returning to year-over-year revenue growth by investing some of your own cash flow back into the growth the right way. You'll learn those opportunities as they go. This happens typically in 4 steps. Sequential quarter versus quarter gross margin growth, which we've already done. We've had gross margin growth. If you guys do not know, GameStop's gross margin growth has gone from 24%, 26%, 27, 28, 29.9 last quarter, 31.4 the quarter before that. They're already in the 30s, guys, so it's looking really good. Revenue growth has happened before too, but when we go quarter to quarter, okay, and when you say sequential, we're not talking about year versus year. We're now talking quarter 2 versus quarter 3, quarter 4. And if you saw quarter 3 had more revenue than quarter 2. So we're there. Year over year gross margin growth, which we already had. Year over year revenue growth, which we will get. We will get there. Maybe not this year, but next year. With the PSA graded cards, with everything we're doing, I want to show you guys something. This is GameStop's page. I went ahead and tracked all the cards they're selling. You guys know that I do this part, this crowdsourcing info. And whenever I see it, look at this. They're selling all the Dream Team cards. I used to have all these NBA Hoops cards when I was growing up. I didn't know they were all going to be worth $30 a piece. Gosh, darn it, I would have took care of them. No, I wouldn't have. I was a punk-ass kid. Okay, but here you go. So all of this and 2,800 items for sale, guys. As you know, we've once had over 4,000 items. And it constantly is restocking. But you can't keep up with the demand. The demand is there. They have to put more money into the inventory, but I don't want them to do it just yet. I want them to do it in February, not January. I want them to sell out of the whole inventory, the whole damn thing, because all of this is going to hit that bottom line. You didn't refurbish it. You didn't refill the coffers. You didn't do anything. All you're doing is selling off and added to the bottom line. This is guys, the PSA graded cards and component and services is just a little caveat on top of quarter 4 that you already know it's Christmas. You already know you can't get beat, right? You have Christmas, Black Friday, Cyber Monday, and then you have 2 Pokemon releases. Nothing's going to stop you. Throw on top of that PSA graded cards, 8, 9, and 10, on top of that PSA graded, you can actually get your cards graded for the service. Boom. Like, do you guys even know? It's forever. It's forever. And I'm forever excited. So he's trying to tell you the steps. The revenue growth comes from delivering real customer value, efficient marketing spend, introducing new products, expanding new channels, reactivating churned customers. They've done all of this, guys. Pricing, defending the base of loyal customers, us. Rewarding constant share, us are these shareholders. That's what we're doing. Challenging part of the journey is the ugly period can last a long time. From phase 1 through 5, you don't get much of any credit. It's not until you hit phase 6 that the outsiders will believe in the company again. But those close to the company can watch as each phase is cleared and know that the company is going in the right direction. However, to be fair, until you get to phase 6, you haven't reached the ultimate end game, the end goal. For the sake of clarity, this is a general observation across several different companies and different contexts, many of which I'm not involved with. This is not observation or prediction related to any specific company. All right. It explains GameStop to a T. I love it, Larry. By the way, Larry Ching's on the board of directors for GameStop. Okay? Now, here's the next thing. Been thinking about when a company's market value is most likely to increasing during this journey, like GameStop's increasing. The short answer, when the company clears that phase that the market finds it least likely to achieve. For example, the market believes the growth company prospects of the company, but views the balance sheet as unrepairable. Then if the company can clear phase 4, clean up the balance sheet, that might be when the value accretion occurs. Well, guess what? Right now you're seeing, on the other hand, having to clear all 6 phases and see value creation requires patience and could be justifiably viewed by investors as a journey fraught with risk. And it's not. It's risk-free for me. On the other hand, it also can mean that there are opportunities to invest in companies that have cleared the first 5 phases but not have yet been rewarded the value accretion because of the market has been waiting on to see them clear phase 6. Guys, this whole thing is telling you GameStop is there. GameStop is going to clear phase 6 soon enough. But he spelled it out for you. This is a board of director for GameStop. This is the board of director that tells you the most. And I'm with them. I'm with them 100%. Larry, I think you're correct. I think you're correct so much that I have $28,424 in there. I know it's not a lot of money to some people. Some people have a lot more than me. That's all I've got. All right? I'm trying my damnedest to pay my bills and stay alive in America. And it's tough with 5 kids and a house and cars and living in California. I've got 28 grand. That's a lot to me. I had an amazing year, guys. This is the year. My yearly return is 77% versus the S&P's 25%. I beat the index 3x. You get to say that if you're a GameStop investor. You get to tell the world that you trade better than the index, and you do because you believe in something. This same time last year, I was sitting on 8,700. Now I have 28,000. I'm up $20,000 after 1 year of saving, 1 year of putting away my lunch money. I only put about $20 a day in there. That's all I do. I don't know why people think it's more. I just try my best. That's it. And you should too. Or maybe you won't. Who knows? I had a real deep conversation with a buddy of mine. Got a buddy of mine who bought in on GameStop at an unbelievable amount. You know, and what I mean by an unbelievable amount, he called me the day Roy and Kitty was tweeting and all of this, and he says, Marantz, I got to get in. And I was like, man, you've been watching me for 3 years, and you never bought a share. But now that it's all over the TV and it's FOMO and everything, now you want to buy in. Now you're a believer. You don't believe in me. You just believe the hype. Or you're one of those investors that has a fear of missing out. You don't want to miss out, and then you think it's all free and it's all easy money. I told him, don't buy in. Don't, because you don't know what it's like. You don't know what these runs are like. At the time, I was up $49,000. I believe it was $49. The stock was $76 that morning. I was up almost $50,000. I don't need the 50 grand. No, I'm good. I don't care. I'm here. This dude bought in for a significant amount. You know what his cost average is? $70. This was 6 months ago. So hold up. You're mad that the stock is not going up or that it's not getting... Remember, all of us GameStop investors have been in for years. We're not mad at the price. We love the price. Look at the chart. Chart right here. Who wouldn't love that? $30 a share? Shit, man. This dude's down like $4 grand. $4 grand. Oh, it's not the end of the world. But it's the principle of it. It's a valuable lesson for people to learn. Play dumb games, win dumb prizes. Dude's at 70. You know what I tell him? I said this to him yesterday. I said, throw $10 at it, man. He said, what? I said, throw $10. Throw $10 at it every day and watch your cost average just start falling. Doesn't matter. It'll come down maybe 10 cents. It'll come down 20 cents. Who cares? It's $10. You spend $10 on words. You spend $10 on drinks. You spend $10 on ammunition. You spend $10 on a sandwich. You spend $10 on something. But you won't even spend $10. And you know what's crazy? Oh, you claim you watch the show. You claim you're my boy. You claim you support it. But you don't even understand it. This is where I'm just like, dude, I can't save everybody. There's levels to this. A lot of jealousy involved. I get it. A lot of people are jealous of you guys. Or they're going to be. A lot of people look at you guys saying, damn, man. Yeah, for 4 years, you've been buying this whole. You bought it in the 10s and the 13s and the 14, 15s. How many shares did you buy from 2022 to 2024? Yeah. You're just walking around on cloud nine right now. $30 is nothing. You're just like, $30, okay. It could be less, could be more. Wouldn't matter. Wouldn't matter, Meltdown. Still buying more. You remember the guy goes, man, Marantz only has $22,000 in that damn stock. Oh, 22, like that's nothing. Like 22 grand is nothing. So I never see him increase his buying percentage at all. That's what they said to me. I don't have to prove it. You see the number here? They used to say 18,000. They say 19, 20, 21, 22. Now it says 23. How long do you think it's going to take before it says 24? 25, 26, 27, 28, 20. Like it's never going to stop. You think I just like woke up this day and I just go, yeah. Yeah, I just woke up. I just woke up and decided to buy something because everybody else was buying it. Yeah, I decided to buy GameStop just because. No. Oh, I just have the tattoo for no damn reason? Man, damn. GameStop, damn good company. I still got to add more to my sleeve here. We're going to make the whole sleeve the channel. I just been busy, man. Been busy living life. Anybody seen inking all day? Why not? There you go. Thank you so much. Man, we set that goal so fast. This is ridiculous. Thank you guys so much for all the love and the support of the channel. I don't even know what to do at that point. Bros, watch this. We're going to... Carvana's a fraud. Carvana we still got to go over that. Boom. I'll leave that alone. You don't have to send. Please don't send the super chats, guys. I don't need them. Can I put that out there? Tonight, you guys done enough, bro. Don't worry about it. I'm good. I don't need it like that. Here's a question from Mr. Man Dude Hat. It says, any concern for this company getting taken private? No. No concern at all. I'm a believer in this company. And I don't believe, this is what I want to tell you, I don't believe anyone can afford to buy GameStop. It's worth more than the money you see on paper. Even to Ryan Cohen. There is no way on God's green earth they're going to sell for $1 billion. What was he up? He was up almost $2 billion. No way. This dude still has Apple shares that are worth over $6 billion now. He's not selling. He's not here to sell. He's here to grow the company, expand his portfolio. It's his identity. It's a winning one. This guy said he's going to sell the company. Zero concern of that. Yeah, why? It doesn't make any sense. Trying to figure this part out. Like, have you ever asked your dad, like, any concern, Dad, that Mom's going to cheat on you tonight? Son, Mom went to bingo. Yeah, but isn't she going to cheat? They're going to say B13. She's going to get up and walk out, bro. I don't know. One of the guys at bingo. You guys ever seen the guys at bingo? Anybody ever been to bingo? Anybody have bingo out where you live? Let me tell you about bingo, bro. Just so we're clear. My grandmother used to go to bingo every night. Every night. The dabbers and shit. If you don't have dabbers, bro, if you're like my mom has dabbers. My mom is a bingo freak, bro. Mom, I remember it was my mom's birthday. She goes, "Are we going to bingo?" I said, "Okay, Mom." She said, "Are you going to come?" I was like, "I guess." Do you know bingo now? You don't even dab the shit. The machine does everything for you. You just sit there, look at the machine. You're just like, okay, what the hell am I doing here? Oh, you guys don't think I have dabber? But guys, the next picture I take that I post on Discord is going to be all the bingo dabbers that are in my. You should see my mother's collection. This woman. Oh no, that's not my favorite one. That's not my lucky one. That's not. I was like, what are we doing? What are we doing? And hey, you bingo people got issues, bro. Yes. The original dabbers. Yeah. Is it dabbers or dabbers? I don't even know. Does Rico Knows pick up on bingo night? Yeah, Sergio, Rico goes to bingo night. There's two. Rico has all, bros. Rico has the inside track to everything. You know, this is how real Rico is, okay? And then guys, if you guys don't know who Rico is, you don't watch the show enough. Rico's a real person. Rico is my twin brother. He's a TikToker. Dude has 1 million views a day. The guy makes his money, does his thing. Good for him. Rick's got like, I don't even know, like 200,000 followers. Rico's like this. I go, yo, Rick, what you doing, bro? He goes, oh, you know, I'm out here. I'm canvassing. I said, what? He goes, well, I'm looking for the next Mrs. Rico. I said, okay, so what are you doing? He goes, well, I joined the Zumba class. I said, what? This dude is like, he's next level, bro. Rick went and signed up for Zumba. I mean, dude, he's gyrating his hips and he's the only dude in the class. Oh, shit, he bought the bells and shit to wear around his waist. Swear to God, this is true. Oh, my God, Rick, man. I said, bro, are you serious? He goes, oh, yeah. He's all, this is my only shot I got at talking to the instructor. I said, what do you mean? He goes, well, you know, she told me she teaches there, so I had to go find out for myself, and I signed up. Got to help her out. He signed up for a whole month. This dude was in there sweating his ass off. Oh, shit. Yo, Zumba sounds like a good idea. Stop it, bro. Can you imagine? Imagine Rico at bingo. Bingo. Like, but you don't have all the numbers. Yeah, I do. What you gonna do, old man? Check the balls again. Check it again. Reek's out. Hey, you guys don't know. Reek's like a real intimidating dude. Anyway, okay, back to the story. Back to the stuff. We got to talk stock. There's some stuff to do. Here we go. Charts. Here we go. TA. Not the kind you want to look at. This is TA, babe. Here we go. Technical analysis. Marantz, how did you know? How did you know that the stock was going to walk the fine line? Oh, I drew this line weeks ago. I drew this box weeks ago. Anybody want to call me a liar? Anybody out there? Out there. Dude, there's two out there. There's Wally. There's that song on Wally. And then there's Fievel Goes West. There's no cats in America. Y'all don't know? Y'all don't know? Fievel Goes West? Never mind. Bro, some of my references are too old. I realize that. I was at work singing My Buddy, and this dude said, oh, you know that rapper? I said, excuse me? I'm talking about the toy. My buddy, wherever I go, he's my buddy. Like, what the hell were you talking? I guess there's a song. I had no idea. Guys, my pop culture references are terrible. I get it, bro. Don't worry. There we go. The streets are made of cheese? The box checks out. Love the box. We're calling it. Yeah, we're chilling in it. Yeah, so we're in the box, right? There's the box. But there's some other stocks out there. Let's call it all the stocks that I'm worried about. So today, GameStop gets pushed down. Okay? I just want to put this out there right now on the daily chart. GameStop gets pushed down, and you ask yourself, are there any other things that they're pushing against it? And there was this one stock called Oris. And I was like, yo, how did this happen? How did this no-name stock go up 40-something%? But if you actually look on the 1 hour chart, it went from nothing to something, all the way up to $3.21 in the pre-market. They were pumping in the pre-market and then straight to the ground. Pump and dump. What? Pump and dumps don't exist on this market, Marantz. You're not allowed to talk about that. I'm not? Okay. Nomura Therapeutics. Is that what this is called? Okay. Nomura Therapeutics. Yes, this is a real chart. This is a real 1 hour chart. This is the real 30-minute chart. Yes, it was way up here, all the way down here, lost 80% today. Yes, this really happened. No, I can't tell you where all the money went. I just know shares outstanding on the free float were 227 million shares at $10 a piece. They were worth they were a $2 billion company this morning. They're now worth 300 million. How do you lose $1.5 billion in a day? Oh, that's right. Their clerical study fell through, and it's no good. I'll show you a stock that I'm worried about. How is it that SoFi had one of the worst days ever today? SoFi, just coming out the gate. Uncle Bruce, you want to explain it to me, Uncle Bruce? SoFi was trading all the way up here, 1590, fell below the 200-day moving average, below the 50-day moving average. It's garbage. Garbage. Tesla gets blown up. Tesla gets blown up, and it gets blown up today. It is not because of the bomb. And, hey, guys, real quick, whatever happened out there in New Orleans, they want to call it a terrorist attack. Some dude driving on the sidewalk, that's a terrorist attack? That's what we're calling terrorist attacks? It's reckless. I give you that. And we could paint him out that he's at Fort Bragg and all this other bullshit. I don't know the stories, bros. I just know I keep my ass at home, but damn, I feel bad for those people. No way 15 people need to die. It's a complete act of madness. And I don't agree with it. But Tesla fell down because Tesla was going to fall down. This is a crazy stock. This is nonsense on this market. I want to explain why it's not fair what happened to Tesla and why it's not fair to you as an investor. I don't know the specific number. I want to say it's 519 or 517,000 vehicles that were going to be delivered. That's what Wall Street was projecting. 515, I should say. Wall Street projected 515,000 vehicles be delivered. They delivered 497, something like that. They're short. But beyond just being short, last year they did 519. So they were going to be short even with Wall Street projections. So the fact that this stock was pumped all the way up until the numbers came out, that's manipulation. What is everybody factoring in right now? Tariffs? A bad run? A down round, as we call it? They must. I've got Tesla, SoFi having terrible days. Apple, that we're talking about two of the Mag 7s are down and out. Or they're just taking them off the top. They call it tax loss, right? Tax gain for loss, tax loss gain. And if you think people are selling off just for that reason, I would tell you everyone's selling off because they know the market's too expensive. Like, the question you ask yourself is, are equities too expensive? Or are bonds too high in interest? Like which one is it? I can't really buy equities. I really can't buy shares right now. I really can't invest into my 401k because it's too expensive. Like the smart people, they're cutting off what they put into their 401k right now. They're not pouring money in. They're literally dialing it all back, and they're buying shit they understand and stuff they respect. You'll figure it out. I mean, I don't give you financial advice, but I definitely know what I'm looking at. And I look at all these markets, I look at all these stocks that are down by so much. And I tell myself, yep, we got that right. We got that right. Like, people keep telling me I got this one wrong. Okay? People keep telling me I got this wrong. And I'm going to show it to you. This is the unfortunate part of this channel. Okay? This is Carvana. This is Carvana, and it has a V-shaped recovery. 376 all the way down to $3. 99% loss all the way down here. Now, here's the worst part. I made a video right here when this stock was at around $7, $6. And I said, this company's fraudulent. This company's a terrible company. I wouldn't buy in. I don't believe in it. Matter of fact, holy hell. I don't care if my phone goes off. I mean, what are we doing? What are we doing? Hey, connect the dots. Let's see what we said.
Guys, welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. This is Connecting the Dots Part 21. Yes. So this is by special request. Somebody went in and asked me, said, Marantz, can you look into Carvana? The craziest part is I was already looking into Carvana when they said it. And I was like, yeah, sure, I'll finish up this video. I've been digging into it. So we're digging. Here we are. You guys know the way this works. One edit, no cuts, nothing. It's just me and you. I'm going to take myself off the screen for a minute. I'm going to show you the actual PowerPoint presentation we put together. But I will tell you this, guys. At the end of this, I'm going to give you my opinion on what this investment is. But as you see what private equity is doing via leverage buyout on a publicly traded company, you're going to find out just how much trouble Carvana might be in. So is it an investment you want to make? Let's see what it is. Let's go. All right, pay attention, guys. This is Carvana right here, Connecting the Dots Part 21 by Marantz Rantz, myself, sure. So this is one of those vending machines. I don't know if you guys have seen them before. I've seen them, Ontario, California, right next to the airport. There's one of these 6-7 stories high. Does it really work? Like, do you really drive up there, buy a car, and it comes down to you? How does all this work? That's what I ask myself. You know, the logistics of this company have somewhat failed for a lot of people because you can go to a website and see thousands of cars for sale. But what does it take to get it to you? And does that actually make the company money? We're going to go through it all right now. But before we do, let's go ahead and look at the stock price. Stock price for Carvana has dropped all the way down. It has lost 99% of its value over the last year and a half. We know that it's been basically primed for bankruptcy. We're going to go over all that. But if you were buying this stock and if you want to see the dilution that just happened, I think they just diluted another 20 million shares. Guys, the float on this damn thing is only around almost 200 million. It's at 190, 189, give or take. But it used to be worth $60 billion. During the height of the pandemic, this company was everything because this was considered like a COVID stock, right? They're going to deliver the cars to you. You don't have to go to the dealership. No one's there anyway. And used cars were everything because new cars were not being built. The chips were on, shortage. So used cars value went sky high. So the value of this company went sky high because they actually sell used cars. Well, here's the unfortunate part. Right now, we're in the opposite. Right now, the interest rates are sky high. And have you ever tried to get a car loan? It's virtually impossible right now at the rates that you don't want to buy them at, right? I remember when I first bought my car, I went to the dealership and I thought, I want to get a used car for a good price because I know they have value. And the guy at the dealership says, no, you want a new car because the interest rate's better. And I said, really? Wow, okay. Well, now look at the world we're in right now where interest rates are sky high. Why would I buy a used car? Well, that's what you're finding out right now. But the books don't look so good for Carvana, but we'll go over everything. But let's go over the board of directors first. I saw this guy here, Michael Maroney. I believe that's how you say his name. And he used to work for AutoNation. And AutoNation, he worked for them for X amount of years before he retired. He worked 16 years at AutoNation. Well, come to find out, Sybaris Capital Management Group in October 2003 went ahead and bought out AutoNation. And why is that, why is that significant? Well, they are a private equity, and we'll go ahead and tie in everything that we need to at that point. But pay attention, that's who bought him out. So he's already part of private equity. The next one's going to be Nihara, I don't know how you say her name, Pikra, I don't really know how to say her name, but she used to be with PricewaterhouseCoopers, one of the big five of the consulting firms. We've gone over that before in the past. And she was also part of Expedia. Now, Expedia Group has since been bought out by Silver Lake and Apollo. This is what was announced, billions of dollars, a couple of years ago, 3 years ago. So you can already see the ties to private equity. Maybe it's just a coincidence that she used to work there. But I'll go with Dan Quayle. Maybe you guys know who he is, the Vice President of the United States. Over the time frame, you've seen numerous people in Congress switch over to private equity. And that's exactly what's happening here. So Dan Quayle is the actual chairman for Sybaris Government Investments. So you know that there's ties right there with the Sybaris Group, Sybaris Capital, and Sybaris Global. They're the same thing, right? So he's on the board of directors. Guys, once you see him on the board of directors, your eyes should just light up. This is private equity. Sybaris is not your friend, and we'll go through it right here. Private equity executives are socially distant from the subsidiaries they control and don't pay a price if those subsidiaries go bankrupt or harm people. They don't live in the communities they affect, and most people don't even know private equity billionaires exist, even as they make key social decisions over their lives. The point is, they're like the ghost, right? They're the guys behind the curtain, and they always have been. Now, if you look at this is intentional. One private equity billionaire, Steve Feinberg of Sybaris Capital, he's the actual founder, reportedly said, if anyone at Sybaris has a picture in the paper or a picture of his apartment, we will do more than fire that person. We will kill him. The jail sentence will be worth it. I.e., they want no press. They don't want people to know that they actually work for that company. They want to be the guys in the background. And that's how private equity works. That's why when you hit connecting the dots and you guys are trying to figure out who works for whom and how are they connected, you always have to dig a little deeper because of this. Look at this message. They're willing to kill someone, and maybe they're just speaking figuratively, right? But when you look at this, Sybaris, for example, has on staff former vice president, who's Dan Quayle. They have the Treasury Secretary, Jon Snow. Feinberg himself is the Trump's Intelligence Advisory Board director. And Feinberg got his start under Michael Milken at Drexler. So we've talked about this. Any ties to Mike Milken? That's where my eyes light up. That's what I see here, and it's already connecting the dots via Carvana. And you already know which way we're going to go with this. Steve Feinberg. Let's go ahead and look him over. Yes, Sybaris Capital. He's been the CEO for them and the co-founder, but he also was a part of DynCorp, D-Y-N Corp. I think that's how you say it. I hope that's how you say it. But think about that company for a second, because that company actually was bought by Sybaris Capital for $1 billion. But what do? They actually own or manage the IT departments for the CIA, the FBI, and the SEC. They literally own all the three-letter legends, all the alphabet agencies. So that's what they've operated for numerous amount of years. You don't think the ties are deep with Sybaris. They're deep. This is Dan Quayle shaking the hand of South Korean President Moon, Mr. Moon. President Moon, JN, shakes the hand with Dan Quayle. At that same meeting, you're going to see those Goldman Sachs CEO at the time, Blackstone Chairman, Carlyle Group, David Rubenstein, and Apollo Global Management, Leon Black. So they're all at the same meeting. They have all went to go meet the president of South Korea. Now, I was reading this book here. This is called Ethically Challenged: Private Equity Storms U.S. Healthcare. It's by Laura Katz Olson. I read this book and I found an entry that I thought was pretty interesting. Okay, guys, if you guys go through it, this is the entry here, and it says additional examples of private equity revolving door, including former President Bill Clinton, advisor to Yucaipa companies, Federico Pena, Secretary of Energy and Deposit. I could read this all down, but one that stands out to me is William Simon, Secretary of Treasury under Nixon and Ford. If you guys don't know who William Simon is, that is KKR. That is the individual that was on the board of directors with GameStop when they pushed him out. And we've talked about this in detail. But as you can see here, Jon Snow, Secretary of Treasury under George W. Bush, now the chair of Sybaris Capital. You'll see numerous people part of private equity that have been in the government. And why? Because it's related. It's so like Evan Baugh right there. Look at this. U.S. Senator Evan Baugh. We've talked about him before. He was with Marathon Oil at Apollo. He used to be the governor of Illinois, and he lost his governorship, the run for governor. He lost it to Dan Quayle. So, like, it's kind of weird, man. His dad lost to Dan Quayle. He ended up winning after Dan Quayle went to go run for president. He got the governorship at 32 years old. You don't think it's in the bloodline there? There's so much history involved here. But if everyone can read it and understand what's happening,
yeah, that's pretty good so far. I just want to tell you guys, I read to the very bottom. I didn't realize this. Rahm Emanuel, Obama's chief of staff, 2-term mayor of Chicago. He was the senior counsel for Centerview Partners. Wow, private equity there too. Man, this is a damn good in-depth breakdown right now of why Carvana is fraudulent. Oh, you didn't know? Maybe you should. Let's go.
Numerous vice presidents present. Everyone has ties to private equity, and it's unfortunate. Even Rahm Emanuel, Obama's chief of staff for 2 terms, Chicago, he's also a part of Centerview Partners. Now, all these guys do business together. I have the whole list there. You guys can look it over. But let's go ahead and look at the deals between Sybaris Capital and Apollo. Guys, they have been partnered up the whole way through. And there's a reason why I'm talking about this. Apollo buys drug maker Covis from Sybaris. They buy ABC Technologies, Albertsons. You guys want to talk about that Albertsons deal? $1.7 billion from Apollo to them. They combined up together for $4 billion worth of debt that they were willing to buy out from Albertsons. Now, word is around town, Albertsons and Ralph's are merging, and that's out where I live right now. You guys know that I have the inside track on commercial real estate, like around here, and I'm just letting you know that's the word around town. But Albertsons it's never meant to succeed because Apollo's in there with them. So Sybaris and Apollo, partners all the way through multiple deals, and Carvana is no different. Apollo throws struggling Carvana $1.6 billion junk bond lifeline. You guys understand what this is. I've talked to you about it before. You want to talk about leverage? We can always talk about the Odessa deal. You know, they bought out from KAR. I talked about it before. KAR was the parent company of IIA or IAA, the one that Sue Gove is on the board of directors with another Apollo head. But when they sold off their Odessa portion, everybody was saying it's because, well, Carvana wants to go ahead and do more, they want to sell more cars. And the problem is, the more cars you sell, you better have the inventory, and then you better have a way of transporting them. So you need these sites. You need like 54 lots out there in America where you can actually move the cars around without having to move them from one central location. It's going to cost you too much. So what happens here? They're forced to turn to Apollo for the cash. And as you can see, the giant investment firm agreed to purchase about half of the $3.275 billion of bonds that Carvana is issuing to purchase car auction network Odessa USA. Guys, they are buying stuff that they can't afford. They're buying this during the pandemic. They're buying this, during 2021 when everything's great. But you know what happens. The recession is here. Interest rates are here. So Apollo and PEMCO. Now, PEMCO, you already know that they've had a partnership before with Apollo. We've talked about this. They've agreed, okay? They've agreed, and it says right here, used car dealerships' largest creditors sign cooperation agreement. That means they're not going to fight over the debt. They own 90% of Carvana's bonds. Apollo Management and Pacific Investment Management Group do. Guys, they own this company. Carvana works for Apollo. There's nothing they can do. Carvana's restructuring plan was rejected by the group of funds that own $5 billion in bonds. The fact that they own the bonds means that Carvana cannot restructure their debt. No matter how much they think they can, they can't, because it's up to Apollo to allow them, and they're not going to. They're going to let these guys crumble, and I'll show you exactly how they're doing it. So this is Carvana's free cash flow. They were negative $3 billion at one point in this year. They're down at negative $1.8 billion cash. Negative. That's up to date right now as of last month. No, it's not looking good. It looks like bankruptcy is what I can see. Carvana shares crashed 97% over the last 12 months, which we've talked about. Carvana's founder, the actual guy who started the company, Ernie Garcia the third. The second would be his father. He actually started the company. But this guy graduated from Stanford. He got his best friend to be the CFO. They go through, well, they're both Stanford grads. I don't know if it's best friend, but they both work for Stanford. And so they're the ones running this company. And sure, they thought it was a good idea. We're going to buy these cars online. It's going to be so great. Well, here's the unfortunate part. You can't buy a car if you're in Illinois. You can't buy a car if you're like in Michigan, I believe. And why? Because they have faulted on, there's these state mandates. How much time does it take for you to get your title? All it takes is one bad experience online, one bad review, and you're going to be scared to buy a car online, just like you're scared to buy multiple things online. But you could buy a t-shirt. You could buy a computer. Those are things that don't cost $20,000. To buy a vehicle, I mean, you want to test drive it. You want to fill, and you think a 7-day return policy is going to help you? That's not going to help you. Not in this case. Carvana's founder lost everything. He used to be worth around $6.7 billion at the peak of this a year ago. He's now worth $119 million. Boo-hoo, I'm so sad for him. The only one who had the largest decline larger than him was Sam Bankman-Fried. Now, Carvana's advertising expense. I'm not a big fan of this. They have been advertising more than normal, and why? Because they actually put an ad in the Super Bowl. I've seen companies that do ads in the Super Bowl, guys. And it's usually companies that are trying to get some cachet, and they shouldn't. It should be companies that have been involved for 40, 50, 60, 70 years, like Budweiser. They need some help right now, Anheuser-Busch. But when you're an up-and-start company, you can't go do a Super Bowl commercial. I saw Career Builder do this. I saw Monster do this. And those companies went out of business, and guess who used to own Career Builder? It was Apollo. If Apollo's idea is to stretch you thin, and you go spend $500 million in advertising, I already know how it works. I'm going to stay out of this one for Carvana. I can't believe that they're spending this much money in advertising. And at some point, you have to let your business do the talking for you. You can't go do it yourself. Carvana's long-term debt. Guys, I've never seen anything like this. It went from 0 to 100 real quick. Real effing quick. Look at it, $6.5 billion in debt. Wait till I show you the cash on hand. I'm just telling you right now, $6.5 billion with a B. Carvana net loss. They managed to lose almost $3 billion last year. And that they've never had a year where they went positive. They've never made money. This company does not make any money. It's never been a profitable company. They've had one profitable quarter. That's it. And that was during the pandemic. Other than that, this is a cash sucking machine. And it went public and people bought it. And you saw the price of what it was. But now you know who owns it. And now you know who's going to own everything. And that's Apollo. Now, goodwill impairment charge this year, $847 million. That's an amazing amount of money to hit the bottom line. I'm going to show you guys this. The interest expense for Carvana, they're literally paying almost $500 million in interest alone. Do you know how much cash they have? I do. They're not going to make it. Let's just look at this, for example. Ally Financial. I saw this deal they made with Ally Financial. It's going to be expiring in January 12th, 2024. This has been pushed out numerous times. But do you know who Ally is? I'll tell you who owns them. 51% of the interest in GMAC to Cerberus Capital Management, the private equity firm themselves. So they actually did the deal themselves. This is why Cerberus is here, because they were originally here in 2016. That's why they've planted Dan Quayle. That's why they've done everything they've done. Now, in addition to all this, I'm not done. We're going to go ahead and look at, I want to make sure I do this right. We're going to look at the balance sheet, and I'm going to break apart some of this. All right, so I took some notes here, guys. I hope you guys stick with me. I'm showing you the Odessa one. I don't care about that. Let's go to page 18. I got to get there. This is the quarterly report. This is the brand new 10Q that they just put out. And let's see, page 18. We're almost there. Page 18 right here. I put this here to let you know they have no money. Long-term debt. There we go. Long-term debt is $5.6 billion. If you see what's due in 2025, 500, 600, 600, 750, and then 3275. Guys, that's $3 billion. If I told you they make no money ever, why does any of this matter? This will never matter. I don't know what they plan on doing with these senior notes. I don't know when they plan on paying them, but the fact that they owe 10% on $3 billion, that's a death wish. That means that Apollo already knew how they were going to do this. They were going to leverage them, get them to go, and of course they're going to take the $1.6 billion just to stay afloat, just to pat their pockets, because the owner needs to get a bonus, right? Or the employees need to get cash out their RSUs or however they want to do it. We're going to go to page 24. This is a prototypical leverage buyout. This is it. This is going to be everything you want it to be, because I'm going to give you an example. At what point this company adopted an employee stock purchasing program? What the hell would you be in asking your employees to be buying into this? They have the ability to buy in, and you're letting them do it. And why? That money's gone. It's a bank. Now you're stealing money from your employees. That's the way I see this happening, the employee stock purchase plan, because this company makes $0. Next, we're going to go to page 34. We'll go all the way down. Don't worry, I don't have bookmarks here. I just scroll and go. Right here, I'm going to show you total cash and cash equivalents. $694 million, all they have. Guys, listen clearly. They have almost $7 billion in debt. They have interest payments of almost $500 million a year. They make no money at all. And you're telling me that they have 260 restricted cash, which I told you are what? Those are like the orders for vehicles. That's money that they put over in an escrow account. It's already it's already accounted for. They can return it if they had to, but they really only have $488 million. That's what they really only have. These guys are in trouble. These guys are in big trouble. I don't know how they last 6 more months. I don't know how they last another year, but someone's going to tell you they can. We're going to go to page 39. And on page 39 right here, it's going to tell you retail units sold, and then it's also going to tell you total gross profit per unit. Now, I want to tell you guys something. $4,303 per unit versus $2,800 last year. This is the problem you're going to have with car dealerships. The ones that are bragging about how much money they make per transaction, that's not exactly good for business. That means they are gouging the customer. And customers will find this out. They'll find out that CarMax and or Costco would do a better deal than Carvana. That's the way this works. You're talking about 4,300, a drastic increase per vehicle that they're making. That means they're taking it from you. And you think that's a good metric to have? That's not. It's not good to have. I'm sorry to tell you this. It's not going to be good value for them either. It's the complete opposite. You have to change the way you think on this, guys. From an investor standpoint, maybe you're like, oh, that's amazing. But from a customer relation standpoint, it's a nightmare. You try to and justify why your vehicles are marked up over $4,300. You know, at the dealership, guys, I'll even stop this for a second. At the dealership, you have what they call a pact. Every car you sell, there's a pact on every car. So the company gets a portion of that. The additional amount left over is for the salesman, for the back end, for everything else, right? Even maintenance on the vehicle, they have to attribute something to cleaning the vehicle, everything they do. So everybody keeps track of every dollar that goes out. But Carvana eliminated the salesman. So you mean to tell me that your pact is $4,300 a car, and that's going straight to the business, and yet this business can't make any money? Think about this. They're down 25% in sales. 25% is a monster number. They went from almost $5 billion to $2.6 billion. They managed to lose $900 million in sales. Now, their gross profit went up, and you would say, that's an amazing transformation. That's going to be awesome, Rantz. Well, guess what happens? When you look at what you need inventory-wise and what you need to push out, how to even make that profit, it costs more. And it's going to keep costing you more. And what's that going to do? It's going to shrink it all in the end, and I'm going to show you right now. So let's go ahead and look at this. This is going to be the last 3 years for Carvana. This is the 10K. And as you look at it, they went from $4 billion. And total operations, they went 5.5, 12.8, and 13.6. But in that same token, their gross profit has come down almost $700 million from the previous year. But when you're only making, let's just say your gross profit's $1 billion, right, guys? Let's just say we make 1.2, even call it 2. Look at what your SG&A is. It's $2 billion, 2.7 billion. You're upside down 1 point. Your delta's wrong. Your delta's in the plus, not the negative. And you always want to be the opposite there. So 1.4, $1.5 billion is what it's costing you to just make a profit of 1.2. You're upside down, buddy, and it's not looking good. And that's why net loss before income, think about this. They lost 400 during the pandemic. 2021, they lost 286 million. And this year they managed to lose almost $3 billion. That is real. I don't care what you guys are looking at. This company is losing $3 billion last year. And you tell me how they're going to make that back. You can't make that back when your best year ever was 2 and 4 on a loss, not a positive. They don't make any money at all. So when you guys are asking me to connect these dots, I can. Sybaris Capital to Apollo to this balance sheet that I've never seen anything like this in my life. I've never seen it. You're talking about from 1.1 billion on cash all the way to 3.8 billion, $3.9 billion. And all they have to show for it is $600 million. They make no money. They make no money at all. It will go bankrupt because now that I know what I know, they're not going to allow them to restructure the debt. Apollo owns the company. Literally, Apollo owns this company. And they know it. They know they have them stuck in a hard spot. So would I ever put $1 into this damn thing? No, not as an investor. As a day trader, I'm sure somebody's going to get excited. $13. Oh, it doesn't cost me much. It always costs you something. It's a percentage of what you're willing to lose. And just know, private equity is here. Sybaris Capital is here. Apollo is here. And they own the whole damn company. I connect those dots. And what do? I run. Still undefeated, guys. GameStop. Can't stop, won't stop. GameStop. I'm still buying that one. This shit right here, Carvana? Never. Peace.
Damn, I'm undefeated. Anybody know why I'm undefeated? Anybody know? Damn. Yeah, make myself bigger. Hold on. Hey, what's up? Man, I had to watch that. I had to take it all in because I'm about to read the Hindenburg Research website, the report they did today. They did a report on Carvana, a.k.a. a hit piece. And let's go look at the chart, though, for Carvana. This is amazing, huh? This Carvana, guys, I made that video and it was at $13 a share. I had no idea. So $13, it was somewhere in here when I made that video, right in here. And sure enough, it went and it ran all the way to 200. Man, it went all the way up here to 280 something? It had a good run, huh, guys? 280 something. It's down already to 199. Let's go to the daily chart. This thing from 268 all the way down and still falling. People got to know. People got to know. You got to answer to this bad boy. Oh, man. The 1 hour chart. Man, falling off a cliff. What happened here, Carvana? People know. 188. 182. Oh, man. Let's go read it. I want to read it. I can't wait. I can't wait to see this. Okay, hold on. Guys, connect the dots. That was part 20, man. We hit that one. Man, I was studying back then, huh? Damn, I found it all. I found Dan Quayle. I found all this stuff. Okay, you're good. You're out of there. Carvana. A father and son accounting grift for the ages. Don't tell me you're doing it, Eddie Garcia. How do they know about you, bro? Carvana is a $44 billion online car dealer founded in 2012. Its main business is an online platform. Okay, I don't have to read all that. Let's see. Despite facing bankruptcy risk in 2022 and 2023, the stock spiked 284%. Worst days were behind him. However, our research, including an extensive document, review, 49 interviews with industry experts, former Carvana employees, competitors, related parties of the company undertaken over the last 4 months, Carvana shows turnaround is a mirage. Oh, we know that. We know that. Our research uncovered $800 million in loan sales to a suspected undisclosed related party. Hey, don't only say that part. You know this better have something about Root. You guys know that we got Root up in here. Let's find out. They have $800 million of loan sales. I wonder who that's to. Along with details on how accounting manipulation and Lux underwriting have fueled, there it is, temporary reported income growth. All while insiders cash out billions in stock. Told you. I said it when it's happening. Oh, my God. Even before considering the findings of our investigation, Carvana is exorbitantly valued, trading at 845% higher sales multiple. Oh, yeah, I already said that part. Do you know what that means? Do you know what that means, guys? It's trading at the highest value because, remember, book value? Remember when I told you book value per share? I go, how the hell is this stock? This is why I try to tell you guys everything about markets. Okay, so I said this stock trades at book value. It trades at $2.94. It trades at over 60 times book, 70 times book. It was like at 100-something times book. Get out of here, bros. It ain't amazing. Anyway, let's go read it. Okay, I get excited. Sorry, guys. Okay, Carvana's business sadly faces major headwinds. Used vehicle prices have declined 20% in the past 3 years. We know that part. Previously, Carvana CEO Ernie Garcia III, the father, Ernest Garcia II, sold $3.6 billion worth of stock in August 2020 to August 2021. Remember when the spike happened? In that year after, he stopped selling, Carvana stock plunged 99% and faced bankruptcy concerns shortly thereafter. Since then, in 2023, you know this guy already raised almost $1 billion. I already told you that. We see the trend. Carvana has touted a bright future and posted 3 consecutive quarters of modest positive net income. Yeah, an aggregate of $245 million despite stress in the used auto market. Yeah. See, remember I said, I don't know how they're making a profit. But they can't be making a profit when everyone else is losing. For every $1 net income is reported, the company has added $139 in market cap. A $34 billion market cap increase with Carvana shares up 42x. Father Ernest Garcia has sold another $1.4 billion in Carvana stock. Oh my God. As insiders unload stock, the company's solvency risk remained. Almost 26% of Carvana's gross profit consisted of sales of customer auto loans to third parties, not to people. Largely in a risky subprime and subprime space, gain and loan sales represented 2.2x Carvana's net income in the past 9 months. They made it up. Carvana has relied on a purchase commitment agreement with Ally Financial. Ally Financial, Cerberus Capital. I just told you this one. That's who owns Ally Financial. To which it sold $3.6 billion in vehicle loans in 2026, 6% of its total originations. Oh my God! Do you know about Ally Financial? Oh God, I could do this. Oh my God! Call me Hindenburg Research. They have no idea I'm the one. I know all this. I already made this video 2 years ago. Oh my God. I feel like I'm Marty McFly. Oh, Carvana has told investors for at least 6 years that it is seeking to diversify outside of its relationship with Ally, but thus far has not announced new financial partners. They can't. They're on the board of directors. The board of directors of Carvana own Ally Financial. Do we not know this part? After calling off the early agreement with the principal with financial, blah, 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 Wells Fargo senior manager told us, as we dug into it and the more we learned, the less we liked about it. They cited specific concerns about lax underwriting and related party loan servicing. Oh, trust me. As subprime auto has declined, Ally has amended its agreement with Carvana 5 times in the last 2 years. Each time, Carvana redacted crucial information that would help investors understand the terms of this relationship. Over the last 2 years, Ally's loan book has become increasingly concentrated, with Carvana's loan rising from 5% in the consumer's portfolio to 8.4%. In September 24, Ally's stock fell 20% after warning investors that on the retail auto side, our credit challenges have intensified. No shit. So, hey, you can't hide it forever, babe. Sales to Ally have scaled back year to date. From September, Ally sold 2.4. What was it? Carvana sold 2.15 billion of loans to Ally in the period. Do they not know? Do they not know? Guys, they don't know? Oh, they have to know. They have to know. One of Ally's executives told us we pulled back from the Carvana specifically. Yes, okay, good. Okay, who cares? With Ally pulling back, a new unnamed buyer is quietly emerging exactly when Carvana needed it. In the past 2 quarters, Carvana sold $800 million in loans to an unrelated third party. Sure. Lean filings revealed that the buyer is likely a trust affiliated with Cerberus Capital, where Carvana director Dan Quayle, chairman of Global Investments, indicating the new buyer is an undisclosed third party contrary to the company's claims. The suspected financing games are occurring in Carvana's face. Oh, these guys don't know. Oh my God. They haven't said the part yet. That they actually own Ally. Come on, guys. How do they not know? Almost 44% of Carvana's loans, it sells in ABS deals and whatever, over 80%. We don't care. ABS deals, FICO, deep subprime range, riskiest levels. Yeah, they're just giving cars away to people who can't afford them. Carvana's toxic loan book is a result of lax underwriting standards. We actually approved 100% of the applicants. Interview with the former Carvana director. Wow, this is about to be bad. How did everybody not sell out of this company? Carvana subprime loans had the highest increase in borrow extensions and subprime auto issuers, a major sign of stress per S&P data. Carvana's extensions more than doubled this year, while most peers saw declines. Oh, people aren't paying their bills. They can't afford it. Carvana's increase in borrower extensions is enabled by its loan servicer, an affiliate to private car dealership DriveTime. Wait a minute, run by Carvana's CEO father. Yeah, I know DriveTime. They used to own that company. In another example, Carvana appears to be dumping unrelated costs and extended warranties onto related drive party drives. Oh my goodness gracious. Oh my goodness gracious. You guys know about that, right? Like if you have a warranty and you go ahead and trade in your car, you can actually sell the warranty back, and then that cuts into like your whatever you're upside down. And if you ever want to hide your upside down, like whatever you are, just go ahead and lease a car, because you can't lease a car and take negative equity with it, just so you know. The buy lease doesn't take it. So just know that. If you're ever upside down in a car, go in there and say, I want to lease my next one. No matter how much negative equity you have, the dealership has to eat it. A former Carvana leader told us that the warranty reimbursements from related third parties and DriveTime, pretty generous back to Carvana. Wow, they're pumping the books. Oh, they're buying back the warranties. Oh, this is great. Okay, so you guys they're dumping the extended warranties on the trade-ins. And they're overpaying them. They're just giving them a kickback. They're paying more for them just to inflate the books. Wow. A former director is a related party. This is why they're getting $7,600 a deal. You guys don't know this? Carvana got so greedy, they're making like $7,000 every car deal. I couldn't believe it. I said, how the hell are they marking up the cars that much? No, this is what's happening. Someone's overpaying. Their own company's overpaying. They don't care. They get the guys. The reason why they don't care and they all go bankrupt, they don't give a shit, is because they all cash out their shares. Damn, Grant, the father over here is making $5 billion off of sales. This is great. Additionally, Instead of marking down inventory, Carvana can offload cars to related party drive time at a premium. Over the last 3 fiscal years, Carvana has generated $105 million in revenue from selling cars wholesale to drive time. I already said that part too. Oh my goodness, bro. Selling cars to drive time is a lever. That's not talked about. It's kind of like Fight Club. There's certain things we don't talk about. We don't talk about drive time. Wow. Engaged in sham deals with drive time, along with numerous other impurities. Oh my goodness. Oh my God. Here we go. One independent member of the audit committee, Greg Sullivan, was previously suspended by the New York Stock Exchange after he sent money to Carvana's CEO, father. Oh, man. His father, the key shareholder dumping billions in stock, previously pled guilty to felony bank fraud over allegations that he helped a company report fake accounting income through sham transactions. SEC charges also allege that he signed a falsified letter to the company's auditors. In addition to the grab bag and related party tricks, Carvana exhibits a litany of other accounting issues. Carvana CEO has said, we don't end up taking the credit risk over the extended period of time. Yet Carvana's loans held on its books have increased 50% since 2021, $553 million in quarter three. Carvana uses accounting treatment that records no loss reserves on the loans and booking. Wow, it's all an accounting trick, guys. All they did was cook the books. That's all they did. Wow. Against this backdrop, with the stock price depressed, Garcia signed an agreement to purchase $126 million in Carvana stock in July 17, 2023. 2 days later, Carvana announced the best quarter in company history, featuring a massive earnings beat from re-accelerated loan sales, as well as successful restructuring of its debt. Garcia's are up $427 million on those precisely timed purchases. In quarter three of 2024, Carvana reported $3.4 billion in retail gross profit per unit. Oh, $3,497. Look at this. And retail gross profit per unit, a key metric for investors to understand the profitability from the sale of the retail unit, the rental units, or the retail units. Carvana inflates the key metric by 34.5% by dumping an estimated $390 million of selling cost into SG&A annually. Yep, in stark contrast to accounting practices at competitors. I told you guys when I broke down these guys 10Q and 10K, I said it doesn't make sense. It doesn't make sense how their SG&A is so low. Oh my God. And I mean, their units the profits per unit were up so high, I couldn't understand it. I knew I wasn't going crazy. Carvana told investors the cost reduction measures did not impact quality. But a former reconditioning leader told us otherwise. They did make an adjustment to the standards, but only for that segment. They call their economy line. Wow, dude. The Freedom of Information Act. We got to talk about that too. Freedom of Information Act. We got to talk about that on GameStop coming up. Finally, Carvana is subject to undisclosed SEC investigation. Oh, good. Good. Overall, we think Garcia's will leave shareholders with nothing. At any point, Carvana's two incredible stock runs, it could have raised significant capital and de-risked its balance sheet. Instead, the company has pushed off creditors and engaged in accounting games while the CEO's father dumps billions in stock. We think Carvana is truly an accounting grift for the ages. We see rough times ahead for both stockholders and bondholders. Ooh, man, the bondholders are Apollo. But this is real talk, guys. Ally Bank is buying up all of their damn loans, and they know it. And Ally is actually owned by Cerberus Capital. They bought them back in 2006, 2005, and 2016. They did the deal with Carvana. They haven't said that in this article here. I don't think they know that part. Oh man, you guys got to watch, man. You guys got. How do I tell these guys? Please watch this from 2 years ago. In 2016, in September of fears of bankruptcy. Okay, we read all that. I got all that. Yeah, I got you. Okay. Yeah, Carvana's ridiculous. They're going down, bros. They're going down. People are going to read this shit. It's over. I hope you guys know. Man, I said buy long dated puts. Didn't I say that? Buy long dated put. I bet you're a millionaire right now. You'd be a millionaire. It's coming right now. In the year after he stopped selling Carvana's, yeah. Oh my God. So here's all this is all like the research on how they came to the agreement. Do they use connected dots at all? Do they use connected dots? Man. But I've been talking about Carvana for years, and people said I was wrong. Right here, look at this. Carvana has told investors at least 6 years that it's seeking. Yeah, okay. In November of 2018, a Bank of America analyst asked Carvana's leadership about diversifying away from its relationship with Ally. How could they? The board of directors are Ally. Oh my God. I got to make the video. I got to tell them. How do they not know? Sybaris Capital is Ally Group. Come on, bros. You guys got to know this part. I don't even care about any of this. I already know. I'm right. Guys, this is like my, look at that. Oh, there. So, see, he has to know. The board of directors. Oh, they have to know. Look at this, dude. They're doing the same shit I was doing. Since the trust appears to be controlled by affiliated Sybaris. Yeah. Boom, 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 boom. Why are they not talking about Apollo, though? Like, I hear you. I'm with you guys on this, on Hindenburg Research. But I have yet to read anything about Apollo and PIMCO holding the bonds. Makes you really wonder, bros. Oh, man. Yeah, subprime dump loads. Yeah. Oh, man, these guys are in trouble. I can't wait to see this play out. Somebody call Gary Gensler, tell him to get back to work. He's got 2 weeks to get this done. Oh, my goodness, bros. Oh, I'm so happy. I'm so happy this happened. Like you ever just, daydream about, when you're going to be proven correct about something? And you wonder, you're like, man, remember I told you Jack and Diane, they weren't going to work out because Jack was over here cheating on Diane every time she turned around? Dribble off them Bobby Brooks, let me do what I please, bullshit. Yeah, I caught Jack. He was holding hands at the mall, going to the next GameStop. If you ever knew just how right we were going to be. Damn, bros, this thing is long. I'm going to go back and read all that. I'm just skimming through it right now for you guys. I can't read all this to you. This is crazy. I just had you watch all Connect the Dots just to know I was right. Oh, my God. Oh, look at all the board of directors. Fails to mention that any documents can find Greg Sullivan as a board member since Carvana's IPO. Oh, no, I'll find him. I'll find his ass. Yeah. Oh, my goodness gracious. Sullivan also was suspended by the New York Stock Exchange as a result of the work on Black Monday. Well, this back in the day. Well, Sullivan. He hired Sullivan as a consultant over there. Hold on, Sullivan. You got any ties to Apollo? Hold on, let me do the homework for these dudes. Gregory Sullivan, huh? Let's see what we got here. Let's see. Yeah, I mean, are you a Drexel Burnham Lambert type dude? I mean, who are you, bro? Pace. I want to know. Vail Resorts? There's no way. Guys, this is Apollo. Oh, no, there's no way. You got to be the son or something, bro. You can't be the real dude. Crocs? Oh, my God. There's no way. That's too easy. You're at Vail Resorts, bro. That's Apollo. Apollo owns Vail Resorts. This is the guy? Carvana. Dude, wake your asses up, bros. They don't know. Oh, my God. They don't have the missing piece. It's Apollo, guys. Oh, my God. How do I tell him? How do I tell Hindenburg Research? You guys do all this damn research and you guys don't know? Come on, man. Hey, TikTok, I gotta go, man. It's not 80s flashback, Pelmont. Listen to me, Pelmont. I'm talking to TikTok. Hold on. Pelmont, it's not 80s flashback, bro. Listen to me, okay? Drexel Burnham Lambert, all the executives, they used to work for Mike Milken at Drexel. They all formed other private equity firms after that damn company got taken apart. You have Ares Capital, you have Cerebius, you have Apollo Global, you have so many, Carlyle, you know, you have Blackstone, you have all of these other firms that exist right now, KKR, all these private equity firms, but the ones that actually developed out of Drexel, and that's Apollo. So Apollo owns all the bonds on damn Carvana, okay? But Carvana's partnership, oh my goodness, guys, how do I do this video? How do I tell them? I got to make a video. My life my life's great. Oh, shares in Lehman? That's cool, bro. That's so cool. Dude, I've been studying private equity for the last 2 years, night and day. These guys are not ready for me. Thank you, Hindenburg Research, for doing all this. You guys did great, but you guys are missing one piece. Just the one piece to put it together. Okay. Greg Sullivan. Carvana. Yes. Okay, I'm going to make that video after we're done with the show. I'm going to make the video. Sorry, guys. Hey, you're here with me right now. I'm on a victory lap. I'm on a victory lap of all victory laps. This show's long, I know. I have so much to do, and it's not even close to being over. I swear to you, this show's not even close to being over because I have stuff prepped, and I have to go live tomorrow all day. I don't even know what to do. Oh, my God. I just want to put it out there. I had this shit 2 years ago. I solved this crime 2 years ago. Yeah, it is what it is, Kyoto. If they want to ban me, block me, whatever. I've been right about this forever, bro. This stock's about to come crashing down. And anybody out there, Tony De Niro, Noisy Corax, I don't care who you guys are that have YouTube channels. You guys ever think I'm wrong about private equity, you guys don't have a damn clue as to what we've been doing out here. We've been doing the real research, the real answers. You're not ready. You never were. Hey, I want to play a video from you guys from about 6 months ago. Let's check out this video from 6 months ago. Let's see if how it all played out for us versus them. You ready?
NK does, the anecdotes do, the people he brought in to kind of fix it up and then summarily fired.
Jeff, you ever been to a GameStop? It's so dreadful. There's like no lights in these stores. And there's over 4,000 of them.
No, they're packed away in the mall where
is he like I don't know if he's breathing or what he's doing, but obviously he's been at GameStop and he says there's no lights in these stores. I have lights, Brian, and what I see is a hairline that's unforgiving. It leaves more to be desired. It's like you haven't mailed it in yet, Brian. It's okay, though. God, this guy. Damn, I hit that dead on the money. Look at that hairline, bro. Oh, these two jokers sat around and talked about GameStop all damn day. I saved these clips, bro. Oh, they're a failure. They're terrible. They're a dump truck of a company.
Newsstand used to be and the shoe polish guy, and it's just like this is probably not a growth industry, and they're selling cassettes. So it's like Bob, it's the house of VCR rentals, and in a modern world, and they never figured out how to go online. And it just as a retailer, it's nothing. Now where it becomes interesting, it's an $11 billion company. Ryan Cohn, to his credit, was smart enough to kind of monetize that. Now the cynical way of looking at it is he is exactly the type of fat cat that was pilloried and made so much fun of in this kind of we're going to stick it to the man with our diamond hands thing. It's like, we're really going to give it to him, huh? And you think that's the W? Because that doesn't seem like the W.
All right,
So he's basically trying to say Ryan Cohen is a Wall Street bro. He's the darling of Wall Street. I don't know when that changed, but I mean, that's what they called him in the past. But he's trying to tell you Ryan Cohen is about money. He has money, so why would it be any other way? Why would we give him the money, right? Well, Ryan Cohen has his money in it. That's why. So I got you. And yes, you guys over there on TikTok, I apologize. You guys can't hear the video, but just stick with it. I'm going to talk. I'm going to do a lot of talking right now.
So what is the trader in you think? You pull up a chart, wherever you get your charts from nowadays, Jeff Mackey. What do you see in the chart? Or you just say, you know what? I'm not going to be involved with the stock because it's totally detached from any form of reality.
oh, it's catnip, no pun intended. I mean, of course, you're going to pay attention to it. How could you not? But it's not a retail story anymore. What it is now is just it's going to be a holding company. What I'm really interested in is last December, to not much fanfare, GameStop said that Ryan Cohen has full discretion over running GameStop's cash. Now, that was never an issue when they were just a failing retailer. But what this bubble and part two as well did was it allowed them to kind of fix up their balance sheet and accumulate some cash. They've already sold almost $1 billion worth of stock since this started in May. They filed to sell 75 million shares, which is just bonkers. At the time, that would have been like $4 or $5 billion, and an $11 billion market cap company with kind of garbage retailers that lose a little bit of money, but they don't matter anymore because now it's a holding company. And so it's kind of Berkshire Hathaway for suckers, or said more nicely, Berkshire Hathaway for people who just have a ton of confidence in Ryan Cohen's ability to look out for them and be the steward of their capital, a la Berkshire Hathaway. Now, the difference is Ryan Cohen's not much of an investor as far as
I actually challenged him, Jeff. So our big conference here at Yahoo Finance is November 12th. It's the Invest Conference. You're, of course, invited, Jeff. But I actually challenged Ryan Cohen in my column last weekend to come debate me at Invest.
Company with kind of garbage retailers.
Come debate me. I challenged Ryan to come debate me. Yeah, no one wants to debate that cat. Well, all these guys don't even own GameStop, bro. These guys probably own GameStop, to be honest with you. I love Hundenberg's disclosure at the end saying that they're shorting Carvana. Damn, yeah. I just want to say I am a certified sucker. Okay, this is a poor man's investment, and poor man's Berkshire Hathaway, and we're just some suckers. That's all we are, bros. We're suckers for Ryan Cohen and for his leadership. But I will tell you, I have to make a video right now. So I'm going to play some more clips for you guys, but I'm going to get up out of here. I'm going to prep myself. I don't know how I'm going to do it. I'm going to keep it short and sweet. I'm just going to tell Hindenburg Research, great job, but they missed the one part, and it's Greg Sullivan. I know you guys are trying to figure out who Greg Sullivan is. He's on the board of directors. He's helping out the Garcias, but what is he really? And he's Apollo. And that's why Apollo has the bond deal. So those two things are going to come out. And they didn't say that Allied Bank was owned by Cerberus. They need to know that. So I'm gonna show them that too. But you know how it goes, bro. We win, bro. If we're not at 50 by summer, will you wear a long blonde wig and scream, "It's ma'am," as your local GameStop and record it? No. One, I don't find it funny. Two, I don't care about the share price. I hope that we're going to be at $10 this summer. I hope we're at $10 a share so I can buy all of it. Do you understand? I hope so. All right, guys. I'm going to be walking out of here. Let's go ahead and look at the charts. And what I'm going to do, just so that we're clear, I'm showing you the charts. When I say walking out of here, I'm really not leaving. I'm going to play clips from each year that I've been on YouTube. Okay? And I hope that makes sense, because it will. We're staying on trend line. Right now, that's where we're at. If you guys see it, looking good, up and to the right. If we go sideways again, if we crash into this line, we have tomorrow. Tomorrow's support is all the way down at around, right around there. Tomorrow's support is around $30.35, somewhere in that range. So that's our support. If we go to the next day, it should creep up a little bit. Maybe the 33.60 that we're at right now, or the 30.60 that we're at. But hey, anything can trigger this stock. Anything can get it going. You guys already know, fundamentally sound company. I love GameStop. Can't stop, won't stop. GameStop. I'm gonna play a clip from each year, and we'll see what I have to say in these clips. We'll see how right we were years ago, right? So these are me when I first started YouTube, and I hope that we can see just how right or wrong we were back then. Enjoy the clips, guys. Okay. I already played one. I played the PP Seeds clip, if you guys heard it, and that's the one where I said you better shit some golden eggs there before you get your money back. Here's a clip right here. This one's gonna be from, let's see, 2 years ago, a year ago, 2 years ago. This is 2 years old. This clip, 2 years old, and let's see what we said here on this one.
But yeah, I hear you on that. But here's the other part, though, guys. This is just in everything. Okay, you guys ready for Life 101? All right, check this out. You know what it costs you to tell the truth? Like, straight up. It costs you a lot. And that's what I'm asking for from like YouTubers and AMC and the board of directors and everything. I just want the truth, right? So it costs you a lot. And I know it's going to cost you some money. It's going to cost you loyalty. You're going to lose a lot. But do you know what it costs you to tell a lie? Everything. It costs you everything. AMC leadership, Adam Aaron, these YouTubers, and anyone else, because you've lied this long, it costs you everything. That's the difference. I could either tell the truth and it costs me just enough, just what the true value is of me and my words. That's the truth. If my truth is only worth, X amount of views or no, I don't sell merch. I don't care. If that's what it's worth, like we only get this many people in the room and this is it. But you can lie and you can get millions? Nah. Keep your lie because I know you're going to lose it all. I woke up this morning and I saw Matt Kors channel. Because somebody wrote in the chat, somebody said, man, Matt Kors is blaming AMC, calling him crazy. He's telling them that they don't know what they're talking about. He's distancing himself from the crew again. And I was just like, I want to go hear what he has to say. That man has 400,000 viewers, 400,000 subscribers across all platforms, 400 something. He had 1,000 views. I was like, wow. I remember that dude had 70, 80,000 people at a time in his chat. He was cashing out, making millions, hundreds of thousands, as he calls it. I want you guys to know the business of telling lies. It might feel good in the moment, but it's going to catch up to you and it's going to cost you everything. So just know that, Adam Aaron, that and this happens in all life. This is all life. And let me tell you something. You ever been 20 something? Half of you guys in the chat are probably 20, 30 something. The rest of us that have been around for a while, 40 plus, I can say that now, 40 plus. We've all run this game. When you lie, you lose trust. Flat out. You might even admit to the lie, but you've lost that trust. So it's gone. You'll tell the truth and you'll still lose trust as well. But at least we know where you're coming from. But that happens like in all things, right? Like even in relationships. How many failed relationships do you have because you didn't tell the truth? You just lied. Maybe it was meant to fail. This is a relationship. This is something. Guys will go out there and be like, oh, I'm just here to make money. Like I literally heard Matthew Kors say today, this is the year we short everything and everyone, even your investments. Basically saying, let's be the villain. He's like, I don't care if I'm the shorter. We're here to make money. And I'm just like, whoa. Like they don't get where I'm coming from. I'm here to go to work. I'm here to go to work, make some more money, take that money, invest it, and call it a day. And I'll see you in like 20 years when it's all said and done.
So that one was from 2 years ago. Yeah, Matthew Kors line of the crew. This one's from 3 years. Not 3. We'll do last year. Let's do last year. Let's see what's going on here. What was this streamed? This was streamed 2 years ago on a live stream. Was it a live stream? Let me see what I said on the live stream. I want to know.
Boom. All right. So here's the picture of the chat that was sent to me yesterday via AMC Bigums. Okay. So I'm going to break this down really quick. And because he will not debate me, and he says at the very bottom, he says, go ahead, dumbass, debate this. I'll be waiting. That's what he says. All right. So AMC Bigums, I'm going to debate it because you want me to. But whenever you want to go ahead and take a day off or ask for vacation from that job you have, feel free to let me know and we can debate on the channel. I don't have a problem with it. I have never been so confident in my life. And they always tell you don't underestimate your opponent. I promise you, I've never been so confident in my life to line you, Boss, or anyone else, Tony De Niro, line you guys up, me versus you, AMC fundamentals, and or GameStop fundamentals. Never been so confident in my life. So whenever you want to come on over, you can come get it. Straight up. Okay? There. We good? We put it out there? All right, now I'm going to tear apart this fucking inappropriate comment that you put towards Kyoto, by the way. First off, Kyoto, keep doing what you're doing, man. You're doing amazing on all the tweets and all the comments and everything you do. But this is what AMC Bigums had to say. He said, really, again, he didn't counter any of my arguments, which I did counter his arguments. It's like he didn't even watch the whole. I did an hour and a half live stream right next to yours, AMC Bigums, because you wouldn't take my questions. But he just said we didn't buy a gold mine. Wow. It's like, wow. Is that what I said? I don't know. Maybe that's all the part you heard. But I don't need to go break it down. If people want to see that video, somebody said, have you ever talked about Boss Blunts? Have you ever done a video about AMC Bigums? I'm like, guys, they're all out there. Just go watch them. They were like last week, 2 weeks ago. You'll be okay. I showed how GameStop, here you go. This is AMC Bigums, the GameStop investor. Yes, he is a GameStop investor, as that's what he says he is. Okay? I showed how GameStop is dying. I showed how you guys. Okay, cool. How you guys burned $500 million this year for a failed NFT marketplace. I showed how, well, let's stop right there. A failed NFT marketplace. $500 million. Well, that's not accurate either. You can't attribute the $500 million just to the marketplace. The marketplace still exists. For something to fail, it would have to have been disintegrated or gone forever. But it's still there. They're in beta mode, not the actual launch mode. And we can sit here and we can debate how long it's going to take for NFTs to be adopted in mainstream. That's possible. But it doesn't mean that we don't have the infrastructure set up for it. That's the best part about it. So if it is the future, which most of us feel that NFTs can be and will be, through the blockchain technology.
So got that part wrong, right? We're not perfect. We tried the NFT marketplace and we lost. The part where I was debating AMC Bigums here is where he said it's a dying stock. He said with more burning to come, your stock split failed. No more retail investors were attracted to a dying stock, so that was a flop. DRS was a flop. That's why cost to borrow for AMC is 188% increased, and he calls it dilution. Your stock's down hard as shit, so when he dilutes and he won't do it right, he literally makes fun of me for talking about smart dilution with AMC, and it says GameStop did smart dilution. AMC has popcorn, new branded all around the world coming in, and we also have Ape to raise cash, unlike GameStop. So GameStop is a slow burn, dying company with a shit CEO that made people hold bags at Bed Bath & Beyond and has made more off the movement than Adam Aaron has. But you want to lick his balls and go ahead and badass debate, then this will be waiting. So that was the video from 2 years ago. Thank you, AMC Bigums. How did we do? How did we do? I wonder. How about last year? How about a video from last year? Don't worry. Hey, by the way, we won that one, by the way, guys. GameStop, $13 billion market cap today. Makes a profit. $5 billion ready to go in the bank. And the best retail investment you could ever make this side of the Mississippi.
Already they told us to don't dance. I do what I want. Welcome to Marantz Rantz. 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 Welcome to Marantz Rantz.
That's a good song right there.
Welcome to Marantz Rantz. Welcome to Marantz Rantz. Welcome to Marantz Rantz.
Welcome back. I see it's still pretty loud on the song, so I'm going to let it play. We're good. All right, guys. Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. It is a new
Bro, the internet just cut
chairs
out.
in. That's
there we
it.
go.
So for those of you guys splashing the pot, I saw you guys coming all the way down with the stock. It's okay. It's at $16.81 at the low today, $16.93. Just remember the 52-week high for GameStop is $27 a share, meaning I'm realistic with my movement. I think the stock will be over $20 by March. I think after it gets announced that the S&P 500 is eligible at that point, and only because they are profitable. I want to make this very clear.
$20
okay?
by March.
I know people are like, what?
Hold on, $20 by March. Anybody know where GameStop went to in April and May? $80 a share, Marantz. I know. I was there. We were at 16 when we made the video. Man, we were killing it.
What are you talking about? GameStop is going to show a profit for their trailing 12. They're going to show an annualized profit as well. So meaning their full fiscal year and their calendar year will be profitable. Meaning the short thesis is out the window, right? Or is it just because of a trend as they...
Yeah, we got that right. There you go. I'll speed that one up. That was easy. Hey guys, here's one for the ages, okay? These are slow burning videos right? This one's long. Hey, this is me when I first started YouTube. This is, 3 years ago, almost 4 years ago, guys. Let's see what I was saying then.
Welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, whole lot of truth, no financial advice. This is the first video that I'm making of 2022. Adam Aaron tweeted again, so naturally I get excited because in the past, like I've told you guys, every time he tweets, I will make a video, especially when it's tweets like this, and we'll go into it step by step. Let's go. My New Year's resolution for AMC in 2020 and early 2021, AMC took on debt at high interest rates to survive. If we can, in 2022, I'd like to refinance some of that debt and reduce our interest expense, push out some debt maturities by several years, and loosen covenants. Okay, guys, that's the first one. There is a second part to this. The second part is, if I go back to him, it's right here. The second part, and excuse me for not being prepared for him. With an improving financial position, one of our 2022 goals is to straighten our balance sheet. There's no guarantee of success, but we will try very hard to get this one done. We are always thinking of creative ways to make AMC future more secure. I got you. Let's talk it out. All right, guys. A lot of you guys, I'm not going to let you make me the villain on this, okay? I've been the same guy from day one, and we're talking day one when it comes to AMC. I've never bought more than 3 shares at a time. I don't care to own the company, and I don't right now. That's my position. Why am I telling you guys about this? One, I have numerous followers that watch the channel that own both stocks. No, not the 4 million people that own AMC that claim they own GME as well, which is all a lie. I own both. No, you don't. You own one. And the one you own right here is Adam Aaron. This guy made millions. The board of directors made millions this past year. You have not. A couple of YouTubers did. A couple of retail guys did. Guys who sold. Guys who bought options. Who risked it all. Kudos to them. That's how it happens. But for the remainder of you, and I know there's a lot of you, some of you don't even click on videos because you right away say, nah, can't be real. Can't be real. Dilution can't be real. This is wild. A CEO going on Twitter and asking and telling you his New Year's resolution for his company is absolutely immature. Show me one. Show me, well, you think this guy's groundbreaking? No. But it's manipulating? Absolutely. Let's talk about AMC fundamentals for a second. Right now, I just, people like Trey, they make me laugh because he posted a thing. It was like, box office broke over $2 billion this last quarter. The box office. Okay. AMC doesn't get all the revenue from the box office. So did AMC do $2 billion this quarter? With Spider-Man? I mean, the whole world's going crazy right now. Talking about this is amazing. Free NFTs at the door. Now you can register where you could have last week. There was a deadline, by the way, to get a free I Own AMC NFT, which, by the way, the board of directors can't even have. That NFT, Sean Goodman can't even own one. He owns 0 shares. And the two VPs, there's another VP who owns like 126 shares. The council, lead counsel for AMC holds like 2,000 shares. Like it's wild. You own more shares than the board of directors. These are the same guys about to ask banks for more money. Okay, so if I have, just to give you an example of how this works, guys. If I was given an allowance as a high school kid and I say, I'm going to go up to my parents and say, I want some more money. This is nonsense. I only have this much. I need more. I need more, mom and dad. And they're going to tell you like this, go get a job. Go work for it. And the banks are going to tell you the same thing, Adam Aaron. Go get a job. go work for it, because no one's just going to hand out free money. And if they do, well, then they're going to be the same 5 banks that no one's talking about, like I did last week, when you find out who are the banks that AMC actually owns money to. Well, Barclays, right? Barclays, however you want to say it, Barclays owns money. They own the bank. So they own it. I believe it was Citi, JP Morgan. It's what, Bank of America. It is, Credit Suisse. I know that one for sure. So these guys are on the dotted line that Sean Goodman signed the deal with. So they don't have to pay their bills. They can make it look like they're FCF positive. Yeah, you're free cash flow positive. Does that, and then everyone out here up in their arms, oh my God, they're making money. No, they're not. They're just not paying their bills. Deferred rent over $400 million. It is real. It is real. This hole is deeper than you could ever imagine. And the fact that he has to address it in public like this, it does a couple of things. One, it lines up a dilution on the shares. Yes, absolutely. When he says, I want to come up with some creative ways, guys, he's not creative, okay? This is not a creative thing to do. Since 2020 to now, they've increased the dilution of their stock 400%. They have actually brought on 400 million more shares onto retail because that's who owns it, which you guys are proud to own it. You want to own the Titanic? That's what you are. And this dude is the captain who shuts the door and he goes down with the ship. The only difference is the truth, he has millions of dollars, millions upon millions. And no, not because he's the CEO of AMC, not by any stretch. His annual salary is 1.1 million, which is more than I already showed you how much this guy makes compared to other CEOs. And if you haven't seen that video, go look at that. This guy makes more money than everybody. All the CEOs of Fortune 500 companies. And yet here he is asking banks for forgiveness, asking for a way out of this. How can they look at the word survive? They're trying to survive, guys. Like, what company are you invested in that's trying to survive? This one, good for you. You believe movies aren't going anywhere? So do I. I love the movies, guys. There's no experience like any other. I mean, I'm honestly, but do you know what movie theaters I can go to? I can go to Cinemark. I can go to Regal. I can go to Edwards. I can go to any IMAX. I can go to any movie theater out there, guys. It doesn't have to be AMC. But when I go to those movie theaters, guess what? Those companies are run the right way. Those companies are evaluated the right way. They're not infused by YouTube and Twitter and Reddit. Yeah, it's all a lie. Yes. All of you guys who have been manipulated to the fullest cannot even see it. Me? Yeah, I love going to the movies, man. I'm not against it. I got one right up the street. Century Movie Theaters. I'm going. I'm going to watch every movie. And guess what? AMC is still the same company. It's still run by the same snakes that have been in it for the last 3 years. 2019, November of 2019, Sean Goodman walked through the door. And that's by the advice of Adam Aaron. Adam Aaron, they walk hand in hand, these two guys. And it's not the only two. There's 19 of these guys on the board. Okay, senior directors and board. All together, they all sold all their shares. Guys, when I say all their shares, 99.9% of all shares held was sold these last 11 months. This is crazy. If you guys don't see the ship burning, it's okay. You guys all know I'm about one company. I'm GameStop, right? I mean, why? Because Adam Aaron is not in it. We have Ryan Cohen. We have a whole group of us that are out here buying shares, buying our own money. What money does AMC risk on losing? Not Adam Aaron's, not his personal wealth. He could go down with the ship and he loses nothing personally. Do you know what Ryan Cohen loses? $100 million. He loses a lot of money. And potentially over $1 billion right now is what he's worth on the stock of GameStop alone. That's why I'm betting with a guy who's betting with his own money. Not to mention the company's doing great things. Financials are strong. No debt whatsoever. But let's talk about AMC. I'll keep going, guys. You thought this video was going to be short? Let's go to it. Because all you guys out there that are invested in AMC need to keep watching these videos. Or you can get all in one spot and it's right here on this channel. But here, I'll give it to you. Let's talk NFT. Oh, guys, I'm so proud that we stepped into the realm of NFTs this year. Yeah? How much money, think about this, guys. How much money has an NFT generated for this company? $0. $0. It cost how much to get that NFT produced to you? His partnership with Wax cost how much? No one talks about it. How about a partnership that he had to pay rights for DirecTV to even show NFL football games in the movie theaters, which he doesn't do today. They did it for a weekend, guys, because it costs money. And you think it's going to generate a stock increase. You see, the whole thing about making announcements, well, this week we're going to do this. This week we're going to give away free popcorn. This week we're going to give away some discounts on movies. The whole theory behind all of that is to pump FOMO and crowd on stock. And when that stock goes up, they're cashing out right behind you. They're selling it. They're selling it. Anytime he's made an announcement, whether it be the popcorn announcement and or the NFT announcement, he sold his shares within 3 to 4 days from that announcement date. Go do the math. This is not, I'm not here for the bullshit, guys. Go look at earnings. Go look at earnings. Listen to the earnings calls in June or July, whatever. It was July. It got moved. You know I got moved? They're trying to get the 4th of July movie totals in there to tell you, guys, we're up. We're doing 60% of what we did in 2020. Okay. Well, shit, man. Who wants to do the numbers of 2020? Nobody. But I digress on that point. But let's just talk about it like this. On that earnings call in July, which I've listened to personally, front to back, I've listened to it maybe 4 times. 4 times. I don't own the company, guys. I'm not some shield. That's not how this works. I want the education. How could I ever own it if I don't know what the hell it is? That's why I listen to it. I only own what I listen to. And then if I believe in it, then I make the choice decision. You know, Warren Buffett, and I'm not Warren Buffett by any stretch. He was offered to buy Lehman Brothers back in the financial crisis. And Warren Buffett went into a meeting and he had a piece of paper and they give him the 13K filings, whatever, all this shit, right? He's right there reading. He's making notes. He says halfway through it, he realized, I'm never going to buy this. So why does he keep reading? He kept reading. He still has it, by the fact, he said. And he said he was never going to buy it once he read the financials. Yeah, smart man. Smartest man of our lifetime when it comes to investing. And yeah, Jamie Dimon bought him for $2 a share. Do you know what's going to happen one day? It's going to come across your desk. Financial investors, you retail investors. This board of directors is going to present themselves to someone and sell out and or dilute their shares. You have like 2 options here. But there's some smart people out there avoiding this at all costs. I'm one of them. I'm going to avoid this company at all costs. Yes, sell it all. The financial advice, pay your bills. There's financial advice. But I'll tell you what. I buy GameStop, and I refuse to touch this damn company. I'm not an elitist, jackass. Of course, I own other shares. I own other companies. I own
We'll stop right there because at the time I was like, I own Ford. Yeah, no, that's enough out of that. I already know what I watch. I bet you he says I own Ford because I remember I owned Ford at the time. I remember watch this.
I own Ford.
Oh, there it is. I knew it. I'm out of there. I let Ford go years ago. And, I never let go. I never let go of you guys. I never let go of the chances and the times that we were right. I'm an elitist. Yeah, I am. I'm a GameStop elitist. I'm going to tell you guys something. On my way out the door tonight. I mean, this is 3 hours of happy times for me. I want to spend this time to tell you Happy New Year. We're in 2025. We've been holding GameStop for 4 years at the end of this month. The bulk of us, the majority of us. And for you new guys catching on, like how great GameStop is, well, congratulations. You just walked into like the best investment of your lifetime. There's a lot of people out there, they're going to tell you don't know what you're doing, or GameStop's not that great, or it's going bankrupt. Like I just had somebody tell me this week, it's going bankrupt. Why are you in it? And I just like looked at them just like, thank you for telling me. I had no idea. We all know the truth of the stock. We all know the truth of the company. But hey, this show's more than just GameStop. So I hope you guys know that when you watch it. I'm doing so much research with every free minute I have. So studying the markets is one thing. I want to make sure I give you guys info that you want to hear, you want to see. That when you show up, you're like, yep, you know what? That's something I want to hear and I want to learn from. So I'm gonna keep doing this till the day I die. And I've decided that, and I'm okay with it. And if I die tomorrow, you guys have all the greatest hits to watch. I just thought we'd watch it tonight, just one time. Like, hey, let's go see how right we've been over these last 4 years. As you can see, every clip is just truth, truth, truth. And then, right before I go live tonight, Carvana. For me, I had no idea Hindenburg Research did Carvana. They're only missing a couple of parts, but they almost have it all. So, I'm going to make a video to tell them. Appreciate you guys so much. I love everybody. It's 8:30. I got to go hug my wife. You guys have a great night. I'll see you in the morning, millionaires. We have some money to make because we know the market's going to be great. Thanks again for a great show, guys. Hope you guys like it. I'll see you around, millionaires. Peace.